Okay, once again, good afternoon. So in this session today, we are going to discuss financial statement of a joint stock company. In the previous classes, we have discussed the basic aspect, that is theoretical base of accounting, then recording of business transactions into journal, ledger, after that preparation of trial balance. So having this background, today we are moving on to the next stage of accounting, that is preparation of financial statement of a joint stock company. Okay, so before I start this, if you have any doubt with regard to the journal, ledger and trial balance, as well as the basic theoretical concept of accounting, what we discussed in the earlier classes, you can ask me for a few minutes, then we can move on to a new area called financial statement of joint stock companies. Anybody has any doubt with regard to journal, ledger and trial balance? Yeah, quickly, anyone tell me what is meant by trial balance?
Consolidation of all entries within ledger uh, for a particular uh, for a particular area. For example,
Area
if it
means
is
in Bangalore, so
no, sir.
not like that.
No, not like that, sir. When I say area, for a particular type of payment
Okay.
or type of inflow, outflow.
So I appreciate your effort of defining or giving a meaning of trial balance, but little more we need, little more clarity. Yes, yeah, you are right, but completely we want some more complete information. Anybody else can just add something to what sir is telling? He's telling it's a consolidation. So there I really appreciate and agree. But the other ways in which we want to put it, little bit clarity can be there. Anybody else?
Professor,
Yeah.
is it summary of an account balance or accumulated balance? Yeah.
That's it. Trial balance is a summary of.
Yeah, it's a summary of an accumulated balance to a particular account based on the transactions.
What do you mean by accumulated balance?
The
Balance is different and accumulation is different, no?
Yeah, the overall
No, normally in
balance.
English, balance is different, right? Balance means something is minus from some other amount, you can get the balance. Accumulation means something is added with another one, you'll get accumulation, right? What do you mean by accumulated balance?
Based on all the transactions.
I agree with you with the word that you used, that is summary. Yeah, that is okay. That is okay. Anybody else?
Sorry, but your voice is very low.
Oh, I'm sorry. I will just check it. Is it okay now? Is it okay now? Yeah, my voice actually it's 100% only the same thing. Okay, anyway, I'll just close to the mic and I'll talk. Okay, no problem. Yeah. Anybody else would like to define a trial balance?
Sir, is it a statement of all ledger accounts balance? I mean, balance of all ledger accounts?
That's it. Simple. We need not to beat around the bush. It's very simple. Trial balance is a statement. First, if anyone is asking, there's a key word for each and every question. There will be a key word. Every lock is having its own key. Okay. Of course, without that key, you can open the lock. You can break it. That's different story. But if you put that key, it will be smoothly opening it. Simple. So financial, trial balance is just a statement. That's what I need. The gentleman is telling, just a statement. Okay, if it is a statement, it should contain something, what it is containing? It is containing the balances of ledger account. That's it. All of you are telling correct, same only, but little more, refined one. That is, trial balance is a statement which consists of the balances of all the ledger accounts. The balances of ledger accounts on a particular day. Okay. Why do we prepare it? Why do we need that statement?
To ensure that the transactions are right, and if there is anything that is pending to be paid out or to be received.
One second. You are telling three things, and you are going to say many more things. I just stop you. Please understand three things this gentleman is telling. One is to ensure the correctness of transaction right, something you are telling. Second one is how much you have to pay and how much you have to receive. But these things are not the objective of trial balance. First one, you're telling correctness of the transaction. If I'm not wrong, use the word correctness of transaction, no? Yes, sir?
Yeah.
We are nobody, we are no one to tell the correctness of the transaction. We just an accountant. So far, we have discussed just an accountant. The accountant role is just to tell, just to enter what the business is doing. Even the business is doing some illegal activity, we don't have anything to tell. That is not our job. So correctness of transaction. You may be telling something else, but the correctness of transaction is nothing but whether the transaction is correct or not. We don't have any right to tell. Sir, I received from Rajesh 10,000 rupees. That's a transaction. Whether it is correct or not, that is immaterial for us. Received 10,000 rupees from Rajesh. That's all. That's a transaction. Am I right? Is it correct or not? We don't know. We don't have any right to judge that transaction is correct or not. Then how that word correct or not comes into trial balance? Correctness of the recording of the transaction. Transaction is correct or not, it's not our duty. But after the transaction is given to an accountant, whether we write it, whether we recorded it correctly or not, that matters for us. To check the arithmetical accuracy of the account, that's it. Use some technical word, use something what we learn in the class. Okay, of course, slowly you will get that. Correctness here refers to the correctness of the books of accounts, not correctness of the transaction. Please understand, transaction is something what is happening in the business on its own, by the virtue of the business, by the custom of the business, by the practice of the business. That we don't have anything to do as an accountant. Received 10,000 rupees from Rajesh, deposited 1 lakh rupee into bank. These are all transactions. What you find at correctness of this transaction, nothing is there. So after that, we are writing in the books of accounts whether the books of accounts have rightly written the transaction or not. That is what we need to analyze. We need to come to know from the trial balance. So trial balance is a statement which consists, which incorporates the balances of the ledger accounts on a particular day of a business organization in order to check the arithmetical accuracy of the books of accounts. Look at the word arithmetical accuracy of books of accounts. What we mean by arithmetical accuracy? Plus, minus, addition, deletion, subtraction, this kind of accuracy. Arithmetical accuracy of books of accounts. And it does not reveal you how much you have to receive from somebody and how much you have to pay to somebody. It will not tell you at all. Then what will tell you? The debtors account. Debtors account will tell you, or the balance sheet will tell you. Balance sheet is the basic tool to know about the financial position of the company. Okay. So trial balance is just a statement which incorporates the balances of all ledger accounts of an organization on a particular day. Right. Now, having understood what is journal, ledger, and trial balance, and we prepared it also, we are moving on to the next concept called financial statement. Okay. Before I move on to the financial statement of today's class, let me ask one more question. What is the basic objective of accounting? Basic objective of accounting. Why do we maintain books of accounts? Why do we follow accounting? Why do we have accounting system? What is the basic objective of accounting? Anybody try? Don't feel that I'm just telling all the answer wrong. That is what. That is just a way of telling you. That's it. You can try.
To know the financial position of a business.
Excellent. Now only I'm getting the same word what I want. Okay. To know the
Financial business.
Sorry, sir. What is that?
Financial position of the business.
Financial position of the business is to be known. For that purpose, I am just having an accounting. Financial position of the business. Is that the only objective of accounting? Is there any incidental or objective which is together with this? Any other
Performance of the
objective?
business.
Sorry.
Professor,
Yeah. Yes,
To
sir.
have
can
control over
I,
performance of the business.
One second, sir. This girl will tell. Then you can. Yeah. Yes, madam. To know the.
To have control over performance of the business.
To have the control over performance of the business. I don't know how you are going to achieve that.
I mean,
objective.
ensure effective control over the business.
Accounting is not just having a control, madam. Accounting is just, suppose you spend some 10,000 rupees on traveling expense of your employees. As an accountant, what do you do? Can you say to that fellow, why did you spend 10,000 rupees for traveling? Why don't you come by walk? Why don't you come by your own vehicle? Can we say
No,
that?
I'm telling in general, like overall business performance.
No, how do you control the, I don't know, can you tell an example? How an accountant will control the efficiency of the business?
No, not in general perspective of accounting. Like, when it comes to the organization, I'm
Okay.
telling like.
No, business.
Yeah.
Accounting is for organization only. Yes, go ahead. Yes.
Professor Manjunath here.
Yes, Manjunath.
Professor, it might be a scenario where you are planning for the taxation plan. So you would like to know what will be a lookalike of a balance sheet before a final balance sheet. So you'll get to prepare the trial balance sheet, or might be you will be having.
Please use the correct word. It's not trial balance sheet. It's a trial balance.
Yeah, trial balance. Sorry, and there will be a group of companies. Will be there 4 or 5 group of companies. So you want to know of one particular set of organization, what will be of profit lookalike or whatever. So you those scenario also you will prepare a trial balance and then you will compare.
No.
Main
We are
balance.
not. See. Please. I'm sorry. We are not talking about trial balance now. We just left that concept just before a minute. To just connect with the previous class and today's class, I just started with what is trial balance and we explained what is trial balance is and we understood. Please, hereafter, if anybody is asking you what is a trial balance, forget about all those scenario what you are taking. It's simple. But trial balance is a statement. First, keep that.
Okay, I got your point, Professor.
Yeah, it's a statement
Thank you.
which is prepared to know the arithmetical accuracy of the books of accounts on a particular day by incorporating all the balances of ledger accounts. That's okay, fine. Now we are discussing about the next concept. So before going to that, I'm just trying to give an introduction. Why we need accounting? What is the basic objective of accounting? Trial balance is one of the steps in accounting, right? You all know that. You all accept that, right?
To maintain the records.
To
maintain the records.
Yeah, to maintain the records. Yes. See, one second, sir. I agree with you. We are maintaining the records in the accounting. Nobody can deny that. But just to take an example, attending all the classes is your objective, or getting that degree is your objective of joining a course.
Getting the knowledge and the degree.
Okay. See, knowledge is okay. That's a different argument. Just a quote. The degree is received by you. That means it's assumed that the knowledge which is to be given to you is given like that. Okay, that's a different argument. Keep it separately. So your objective is to get the knowledge and the degree.
Correct.
Fine. Yeah.
Correct.
But attending regular class, attending all the classes is not just an objective. That's a process.
Yes.
Yeah. Similarly, keeping records is not just an objective. Keeping records are the process.
Accuracy of records.
If you're keeping records, you are supposed to have an accuracy in that record. Just keeping a record does not mean that just with mistakes you can keep the record. That's not the thing expected. If you keep the records, that means you are keeping the records with accuracy. Okay. So that's just a process. That's just a process. Do you know any other objective of accounting? Why do we keep the records?
To
Professor, is it to
ascertain
do
the
with
profit and loss statements
Yes.
and financial statements.
Sorry.
To ascertain the profit and loss statements and the
How
balance.
do you ascertain a profit and loss statement? Can you ascertain a statement? We can prepare a statement, but
Yes.
we can say like this: to ascertain the profit or
Loss made by
loss.
the
That's
company.
it. Correct, sir. Very good. So to know the financial performance of the business.
can we say, Professor, like it's a record of all the debits and credits of the credit
Madam,
statement?
you are trying to say the meaning of accounting. Please understand my question. My question is, why do we need accounting? It's a record of debits and credit. You are right. For a question called what is accounting?
To check at the end of the year whether the business is in profit or else whether your business is.
That is what the other gentleman was telling very clearly. That is what I also written here. Financial performance
To know
of the
the
business.
financial, yes, to know the financial performance of the business.
Yeah, financial
Means
performance
what is the
is
assets,
nothing but, yeah, yes, thank you. Financial
what is the
performance
profit
is
and
nothing
loss and
but
assets and
profit or loss. Financial performance is nothing but profit or loss. Then what is financial position of the business? What we mean by financial position of the business? Financial position of the business is nothing but something, a state of affair which is relevant to assets, liabilities, and equities, and equity, and equity. Assets.
Sir, your mic, please. Can you be close?
No, I am very close only. What about others? Are you able to listen properly or not?
Sir, it's changing.
Yes, Professor.
Changing.
We are
Changing
listening.
is there. Okay, okay. Fine, sir. Yeah. So assets, liabilities, and equity. Financial position is nothing but the state of affair of a company or a business with regard to assets, liabilities, and equity. Just a quick recap on these 5 terminology. Okay. Assets, liabilities, equity, profit, and loss. What is asset? Anything what we own and control is called asset. Example, land and building, fixed, equipments, plant and machinery, etc. Liabilities are nothing but
assets means all tangible and intangible asset, whether it is assets and liabilities or goodwill.
no. Why are you confusing? Tangible assets are nothing but tangible and intangible. Okay, that's accepted. Something you are telling liabilities, goodwill, and all. What is that?
No, I said assets means whether it is tangible or intangible.
Okay, accepted. Accepted. Assets mean anything which you own, and you have a control on that. The flyover, there is a flyover in Kerpuram. Okay, there is a flyover. There is a flyover in Silk Board. There is a flyover so many places in Bangalore. All those things are assets for us? No, because it's not owned by us. It's owned by someone else. For them, it is an asset. So asset means anything. That thing can be seenable. That thing can be tangible or intangible. No matter. You are right on that. Assets are anything. That thing can be of tangible or intangible, but it is to be owned by you or by the business and controlled by you. The benefit is to be received from that particular thing by the business. That is what we call it as assets. If you take an example of tangible assets, it is nothing but plant and machinery, land and building, equipments. Intangible assets are patent, copyrights, etc., trademarks, etc. Yes, madam. Is it clear, all of you? Assets. What is asset? Tangible, intangible is one way of classification of assets based on the tangibility. Another way of classifying the asset is based on the durability. How long that asset is going to be that form itself. Based on that, we classify the asset into 2 categories, that is current asset and non-current asset, or fixed asset and short-term asset or current assets. Example for current assets are cash in hand, cash at the bank, amount receivable from our debtors. Simply we call it as accounts receivable or bills receivable or trade receivable or sundry debtors. Okay. And then accrued income is another example of current asset, accrued income. What is accrued income? The income which is earned by the business, but not still received from the person from whom it is to be received. Example, the bank interest, I earned it. The time is over, so my money is getting interest, but the bank policy is to give the interest once in 6 months. So up to that receipt, the income is just a accrued income. It's an income of this current year, but it is not received. So it can be called as current asset. Prepaid expense is also called current asset, prepaid expense. You need not to pay right now for that expense, but you paid in advance. Instead of you keep the cash with you, you paid that money to the benefit giver, the service provider. You given that money. So for example, say for example, next month rent you paid in the current month itself. Up to next month rent due, the date of due date, the rent paid for the next month is current asset for your company. So current asset, fixed asset, otherwise you can classify them into tangibility, intangible and tangible. Okay, there are some classification, but in this juncture, you please understand what is asset. Asset means anything which is owned by the business for its benefit for the longer period of time or for shorter period of time and controlled by the company. Anything. Next, liability. What is liability? Liability.
The things which are owed by us.
The thing which are
owed by the company.
Yeah, the value which the company owes to others. The value is not a thing. Liability cannot be a thing. It can be the value. Any value that need to be settled by the company to outsiders is called a liability. Suppose salary is due on 31st. If you pay the salary on 31st of January, it is not a liability for you. You paid it. It's an expense. But still you did not pay up to the next 1 week, 2 weeks, 3 weeks. You did not pay the salary of the employee, which is due on 31st December. But still you did not pay up to 15th January. Then that salary becomes outstanding salary. That becomes a liability. Or you take a loan from a bank. That becomes a liability. You have to pay later. You are taking money from debenture holders. Taking loan from general public. That's a liability. Okay. So like that we have a lot of liabilities. Again, long-term liabilities, short-term liabilities. Current liability, non-current liability. Short-term is called current liability. Long-term liability is called as non-current liability. Non-current liabilities are those liabilities which will mature, which will demand you to settle in a longer period of time. Short-term, whereas short-term liabilities are those liabilities which need to be settled, which need to be paid off within short span of time with a maximum period of 1 accounting year. So that's called long-term liabilities. Example for long-term liabilities are debentures, bank loan, public deposits received by the company from the public. Example for short-term liabilities are bills payable, sundry creditors, bank overdraft, outstanding expenses, any expense for that matter. Advance received from the customer. These are all the example for short-term liabilities. Then what is equity? Any idea what is equity? Equity is nothing but the owner's claim in the business. Book value of owner's claim in the business. Book value of owner's claim in the business. Owner's claim in the business. How do you calculate equity? Equity is always equal to total of your assets minus total of your external liabilities. Total of external liabilities. On any given date, the total of the assets of the company, total of the assets of the business. Okay, and then if you minus total of liability from that, the remaining amount is called equity. This is what we call it as accounting equation. Assets plus liability is equal to, asset minus liability is equal to, asset minus liability is equal to equity. Similarly, equity is equal to asset minus liability already written. Okay, suppose asset, what is asset? How do you calculate asset? Asset should be equal to, in the equation, asset should be equal to L plus, okay, liability plus equity. Then liability will be equal to, liability should be equal to asset minus equity. So this is what we call it as accounting equation. The same thing we are going to know on a particular day. How much is my total asset? How much is my total liability? What is my equity of my business on a particular day? To know this is called as financial position. So this is the basic objective of accounting, to know the financial position of the business. Then second objective is to know the financial performance of the company. What is financial performance? Financial performance is nothing but whether the company has resulted in excess amount of earning over the expenditure, that is called profit, or it is loss, the excess of expenditure over the income, Income is less, expenditure is more, then we will end up in loss. To know that how much is my profit, how much is my loss. That is the second objective of business. So it's not first and second, one, two, number one, number two, not like that. Both are the just a bullet point we are giving to know the financial performance and to know the financial position of the business. Okay. These two are the objectives of accounting. These two can be achieved through the end product of the financial accounting that is called these two statement. What is the two statement? Balance sheet, which can be otherwise called as financial position statement or simply position statement, and another statement we call it as income statement or statement of profit and loss, otherwise we can call it as profit and loss account. Profit and loss account. So these two are the end product of financial accounting. These two are the end product of financial accounting. Only for these two, we are preparing all those journal, ledger, trial balance, and everything, books of accounts, recording, everything is happening only because of the end result. We need these two. One is balance sheet, another one is statement of profit and loss. These two statements put together, these two are put together, we call it as financial statement of a company. Financial statement of a company. You remember we discussed in the very beginning, there are different types of ownership of a business. One is sole proprietorship, another one is partnership, into undivided family, cooperative form of business organization, and another one is limited liability company, or you can call it as joint stock company or simply corporation or company. Okay, you always say that corporate world and all, no? Corporates. We mean to say corporates. Example, Wipro Limited, Infosys Limited, SBI. Any business organization whose names are ending with the three letter called LTD, limited. If it is there, that business organization is called as joint stock company form of business organization. Okay. In this session, we are going to concentrate only on the financial statement of joint stock companies, not on the four other forms of business ownership. The single owner, sole proprietorship, partnership, into undivided family, and then cooperative form. We are not going to concentrate on these four because accounting as a profession is becoming very much significant only for corporate form of business organization. Why? In corporate form of business organizations, the ownership is separated from the management. Owners are different and managers are different. The board of directors are regularly managing the business, but whereas the company is owned by several number of shareholders who are scattered throughout the world. They don't even bother what is happening in the business on a day-to-day basis. They just wanted to know what is happening in the business once in a year or once in a quarter through the financial statements. So that gives more importance for accounting profession in joint stock company form of business organization. So keeping that in mind, we are going to discuss the financial statement of joint stock companies only. Okay. If it is a joint stock company, yes, sir.
Professor, what are the different types of companies you said? Limited, single owner, sole proprietorship?
No. That is not a type of company. Please, you are wrongly understanding. There is not a different types of company. Company, what is company? Company is having a legal meaning. We cannot say a company for a business. Suppose a business you want to start, you can start the business in any one of the 5 forms of ownership. One is the sole proprietorship, single owner. Another one is partnership. Another one is Hindu undivided family business. It is not a family business. Family business is separate and HEO business is separate. Please understand. All HEO business can be a family business, but all family businesses need not to be a HEO form of business. The next one is cooperative form of business organization. The last one is company form of business organization. So when you say company, you are referring only this legally. What is that? Any business organization which is registered under Indian Companies Act 2013 can only be called as company. Remaining anything cannot be called as, rest of the anything cannot be called as company. These are all just a business organization. If you want to say this is sole proprietorship, you can say proprietorship. This is firm, FIRM, firm. This is just into undivided family. This is cooperative form of business organization. Infosys Limited comes under this category. So company form of organization will have these three letters in their official name of the company. Infosys Limited. Infosys Limited. That is why we are coming to know this is a limited liability company. Okay, Wipro Limited, HDFC Limited, okay, SBI Limited. What and all you have the last letter LTD in the name of the business, name of the title of the business, that is called company. Remaining all cannot be called as company. Okay, then again in company we have different types of companies. In this only we have different types of companies. Private limited company, public limited company, government company, public sector company, okay, and then chartered company, statutory company. There are many companies. That's not our subject matter now. You please understand all the companies having this name limited. Okay, for those people, the owners are separated from the management. I may be sitting in Bangalore. I can buy the share of, some other company which is there in Mumbai, Reliance Industry Limited. Okay, whose office is in Mumbai. I may buy the share of that company. I will not go to the company every day to see the books of accounts, what is happening in the company. On behalf of me, I appoint the board of directors. Like me, there are so many shareholders. In association with them, we elect some board of directors. They will take care of the daily business activities. But how it is taken care, that is being recorded in accounting. That is why accounting becomes more important in joint stock company form of business organization. That is why we are going to study the financial statement of only joint stock company form of organization. Is it clear, sir?
Yes, sir. One doubt here.
Yeah.
What is the difference between private limited and public limited companies?
Anybody would like to answer for the gentleman? Yes.
Professor
Difference between public limited and private limited, quickly.
So, Professor, public limited is something where the shares have been allocated, where the shares have been listed in any of the stock exchanges, and private limited, all the shares have been owned by a specific or a set of group people.
In public limited also, suppose me, my father, my mother, my wife, and my 2 children, and one more, my sister, all these people can join together. Can't we start a public limited company? Myself, my wife, my parents, 4 members over, my 2 children, and my sister. If we start a company, that is a public or private?
Private.
Why?
For private.
Why?
Professor, I think that is one person's personal interest, right? We are creating
What
a
personal
company.
interest? My interest may be different from my son's interest, right?
No, but we are creating a new company which is
Yes.
common to all, right? Like all
Common to
people
all,
of the
common
same
to all
family,
of,
right?
common to all my 7 members, including me, 7 members are there. Common to all, we are starting a company. Can't it be a public limited company? So, well, okay. So when you define public limited and private limited, I agree with the
Professor.
gentleman who was trying to tell the differences. I agree with him. But
Professor,
one small addition. One second.
If at all it should be a public limited company, then 51% should be invested by public.
Public means who is public?
It will be of government.
Huh?
Government.
Shareholders.
Or general public.
Shareholder.
So please don't confuse. Let us not confuse much because I don't have time to discuss all those things. We have to move on to the accounting. Let me finish it by putting very simple. Public limited. Please don't have a confusion here. Public means government, not necessarily. Example for public limited company is Reliance Industry Limited. If I say like that, somebody will wonder why Reliance Industry Limited is a public limited company. Government is not having any ownership in this company. Not necessarily. At the same time, I will tell you, SBI is also a public limited company. Then now you have a confusion, sir. SBI is a government company, or government is having a stake in that. Reliance Industry, government is not having a stake in that. Then why you categorize both into public limited company? It is true.
SBI is not a government company; it's a public undertaking company.
What do you mean by public undertaking and government?
Public undertaking means SBI shareholder is a shareholder is general public.
Not general public only. Government is also having a stake in that.
Yeah.
Yeah. So, according to you, please listen to me carefully. SBI, you can also buy equity share. I can also buy equity share without informing to the existing member of SBI. So, public limited company is nothing but a company whose shares can be freely transferable from one person to another without the intervention of the company, without the intervention of the existing shareholder. That is what we call it as public limited. The shareholder can be either individual like you and me, or it can be a government like state government, Karnataka government, or Union Government of India, or Tamil Nadu government, whatever it may be. Okay, Tamil Nadu government or Karnataka government or Union government is also one of the shareholder, like you and me. They may have more number of shares, we may have less number of shares. That's the difference. But according to law, both are shareholders. If the share of you, which is there in that company, can be freely transferable to anybody. What do you mean by freely transferable? You can sell it to anybody without the intervention of that particular company. If so, that company is called public limited. That's what the first gentleman was telling. If you are selling the shares to public, it is called public limited. Okay, but it is not always listed company. There are some public limited company which is allowing its shareholder to transfer their shares from one person to another person without listing. Also, there are some companies without listing. Also, they allow their members to sell their shares. So, to put it a conclusion, public limited company is a company which allows its shareholders to transfer their shares to anybody else. To transfer their shares to anybody else on their own is called public limited company. Suppose take an example of my own, myself and my wife, to my children and another person, parents, put together 7 members, we are there, we are starting a company. Now it's left to us whether you want to go for a public limited or private limited. Since we are blood relation, you cannot label it as a private limited company. If you are registering as public limited, now my elder son can sell the share without my permission to any one of his friends or to anyone of third party. If that is the arrangement in the articles of association, then that company can be called as public limited company. Please don't confuse public sector company and public limited company. SBI is a public sector company as well as a public limited company. Life Insurance Corporation of India is a public sector company, but it is not a public limited company as of now. In the last budget, the Honorable Finance Minister was proposing to go for an IPO for LIC. After LIC going for IPO, it will become a public limited company, and also it's a public sector company. Up to that time, only owner is Government of India or some of the financial institutions of Government of India. So if that is the case, the shareholding of that company cannot be coming to individual like you and me, the public, general public. Up to that time, Life Insurance Corporation of India is just a public sector company, Government of India undertaking, Government of India enterprise. Okay. Private limited company does not allow its members to transfer their shares from one to another without the permission of the existing members. Suppose in my case, we all 7 members are joining together. We don't want to allow anybody else to enter into our business. If that is the case, we can start the business as private limited company. In the articles of association, when we are registering with ROC, we have to make a clause. We have to make a rule that the shares of this company cannot be sold to outsider without the permission of the existing other 6 members or other members. If that is created in the articles of association, that company can be called as private limited company. A private limited company can also be a government company. It can also be a private sector company. If myself and my wife or you, we two are together and joining private limited company, that company is a private sector, private limited company. Government itself is starting a company, that's a public sector, private limited company. Okay. I think we are moving so much away from the main area of our accounting. We'll come back. At least it is making a sense, right? What is public limited company? What is a private limited company? Shares are transferable means freely transferable means public limited. Shares are not freely transferable means private limited. Is it clear, sir?
Clear, Professor. Thank you.
Yeah, one who's asked first. Yeah. For further clarification, please refer to the MCA website, Ministry of Company of Corporate Affairs. We have a lot of information on that. Okay, come back to this. So we are going to prepare the financial statement, that is profit and loss account and the balance sheet of a company. If I say company, I mean to say a public limited company. Okay, public limited company. Okay. What is the rule we have to follow? Basic accounting principles we are following. In addition to that, if you are going to start a company in India, we have to register under Indian Companies Act 2013. So that Companies Act is giving you lot of provisions, lot of rules and regulations to follow in your daily routine life of your company. Accounting is also one of that particular area, what they are giving rules and regulations. So to prepare the profit and loss account and the balance sheet of a company, we need to follow the basic accounting principles, what we know so far, plus some of the guidelines or stipulations given by Indian Companies Act 2013. Okay. What they are giving? They are giving a main aspect of format. You cannot just prepare a balance sheet and just prepare a profit and loss account as of your own format or your own accounting basic format. We have to follow some format given by that particular enactment. What is that enactment? Companies Act. What is the format they are giving you? I'll just to show you what is that format. You have to prepare only in that particular format. So before going to that, profit and loss account, we are finding out profit or loss. What is profit or loss? How do you find out profit or loss? Profit is equal to
investment minus expenses.
Income over
one
expenses.
second, madam. Let us clarify to that, sir. Sir, investment minus
Expenses.
Suppose you are investing 1 crore in starting a business. The expenses so far in the business for 1 year is 10 lakhs. So what is your profit now? Sir, are you hear me? Excuse me, sir. Okay, I think he lost his connection. So it is not investment minus expenses. If you do that, that is illogical. Okay, investment cannot be compared with expenditure. That is illogical. Investment is there with you only. You can just dispose it off and you can get some money out of that. So investment cannot be just compared with expenditure to find out the profit. Instead of that, what you have to do? Profit is equal to
Turnover minus expenses.
Turnover minus expenses. What is turnover?
The cash or what that income revenue what we have generated through our business.
That is called turnover. Okay, turnover here we refer only sales actually, but sales is the major revenue. Sales is the major revenue. In that case, turnover is fine. But there are some businesses they will also get some other income. So it's not.
Professor, it can be considered sales minus purchases minus expenses is a profit.
Okay.
If it is a production manufacturing, if it is service industry,
yeah,
it will be a commission which you earn or
okay.
fee-based fee-based income you earn minus capex and apex, and then the remaining.
Okay. See, instead of doing all those technical terms, for a easy understanding, simple understanding, income minus expenditure. That's it. Your capex, your all those expenditure, everything put together. The attributable expenses and the total income, revenue minus expenditure. The excess of income over expenditure for a particular period of time is called profit. If it is a service company, as you told, the bills generated, that's also revenue. That's all. Revenue from operation, revenue from services. If it's a manufacturing company, revenue from sales. Okay, revenue from sales and any other revenue, other income. Other income means apart from your major activity, if you have any other activity from that also you can get some income. So put together all total income minus all your expenses. Okay, this is a very basic concept of accounting. Profit is equal to income minus expenditure, an equation. If this is minus, if income is 1 lakh, expenditure is 1,20,000, so it is going to be minus, right? Income is 1 lakh. Expenditure is 1,20,000. Then profit is
Not profit, loss, professor.
Minus 20.
minus it. Profit is minus 20,000. That's what you are telling. It's a loss 20,000. If you say loss, you have to say 20,000. If you say profit, it is minus 20,000. Okay. So this is how you are finding out profit. It's simple term. But in 1 year, we don't know how this 1 lakh was earned. For that only we are keeping that records, journal, ledger, all those things. Okay. Similarly, the expenses. It is not 1 day expense. It's 1 year expense. Actually, 1 year expense. So 1 year expense is recorded in books of accounts. Okay. So we are getting a profit of minus 20,000 or loss of 20,000 rupees. Fine. So to know this, we need to prepare a statement, because this 1 lakh is not one single amount. It may be from 2-3 income. This 1,20,000 also is not from one single expense. Expense is a broader term, much more wider term. Inside that there are so many expenses. To know that, the Companies Act is giving a format. The Companies Act is giving me a format. How do we compare? How do we match the expenses of a company with the income of a company? For that, they are giving a format. The simple logic is same. Expenses are compared with the income. That is what the profit or loss. But how do you compare that? In what format you compare that? The Companies Act is giving you the format. Please understand, those who are BCom, BBA, or those who know little bit of accounting or more of accounting, please understand, you have to prepare the profit and loss statement only in this format. Forget about what you learned before. Okay, that's very much a warning also, I'm telling you. Because in the exam, final exam, if you write, you will not get any mark, then you will get less mark on or 0 sometime. You have to follow only this format. Who is giving this format? This format is given by Indian Companies Act 2013. Okay. Since you are a company, you have to follow that. It's mandatory. I request all of you after this class, when you are free, go to any one of the listed company or any one of the public limited companies website of your choice, or your own company. If it is a public limited company, go to your website and see the latest financial statement, profit and loss account, and the balance sheet. Okay, right. So how it will be looking like? It will looking like this only. First one, particulars, some working note number, then the amount. Normally in practice, it will be 2 columns. One is for last year and another one is for current year. Two columns will be there. 2 columns, current year and the previous year. But now in classroom, we don't want that. We have only one column for the current year. That's enough. Okay, how much is the income, how much is the sales of last year, and how much is the sales of current year? Like that, they will compare and give the 2 years information together in practice. But in classroom, we are going to prepare it, so we'll prepare for only 1 year. If you do for 1 year, that's equally applicable for the next year also, the way in which you can prepare. Okay, let us understand the format first now. So the revenue from operation. Please understand, there are 3 ways in which you can do your business. One is manufacturing, just now somebody told, manufacturing business. Another one is just buying and selling, that is trading business, trading. Another one is service, just you are rendering a service, hospital, the mobile, the automobile services kind of businesses. Okay, tourist operation, anything for that matter. So manufacturing business, trading business, and service business. Some businesses may have the combination of these 2 or 3. That's also possible. In all those cases, revenue from operation means sales. If it is manufacturing, trading, it is nothing but the sales revenue. If it is service, it could be revenue from services, the bill generated, the invoices what you made. Okay, sales. Instead of sales, you'll be calling it as revenue from services. But anyhow, in all the cases, these will be called revenue from operation. How do you find out this? From the trial balance. Please understand, all the data what we need for preparing our financial statement will be taken from only trial balance. Trial balance is our reference point. Our journal, our ledger is no longer important for us now. Everything is put together. We have only one single document. The document is trial balance. From the trial balance, We have to take all the data appropriately. We have to write it in the statement and we'll get the profit of the company. Clear? Okay. The skeleton is common for all the companies in India. The skeleton. This is a skeleton. Common for all the companies. Common. It's not at all changing. You take any company for that matter in today's environment, it should be same. So you also please remember this format. Only the amount is going to be changed depending upon the trial balance value. Okay. So revenue from operation is nothing but the sales, net sales. If there is a total sales and if there is a sales return, we have to minus the sales return and you have to write it here, revenue from operation, by preparing a small note, working note. Then other income, apart from your main operation of the company, is there any other income? That income will come under other income. Okay. Then expenses, all expenses are classified into some categories: A, B, C, D, E, F, and G. First expense is cost of material consumed. If you are a manufacturing company, this information need to be filled. Otherwise, this need to be left blank. For a trading company, there won't be any cost of material consumed. For a manufacturing company, there will be a cost of material consumed. What is cost of material consumed and how do we calculate it? Simple. Opening stock of raw material plus purchase of raw material minus closing stock of raw material. Opening stock of raw material plus purchase of raw material minus closing stock of raw material. It will be given in the trial balance. These two will be in the trial balance. This will be given after the trial balance as an information, which we call it as an adjustment. Okay, after the trial balance, it will be given in a statement. Some sentence. It will be given in a sentence. Closing stock of raw material of the company is 30,000 rupees. Take that and minus it here. Is it clear? Am I making it clear up to now? Anybody?
Yes.
Yes, sir.
So next one is purchase of stock in trade. Next expense is purchase of stock in trade. It will be applicable only for trading company. They buy material and they just sell the same material. They don't want to convert anything. They don't want to add value anything. Just buying and selling. Those companies will be writing the value in this sentence. Here, they will write the value. If it is a manufacturing company, you leave it blank here. Write the format as it is and don't write the value in the value column. Figures column, you don't write the value. Okay. The next one, change in inventories. What is change in inventory? Change in inventory is nothing but opening stock of work in progress, finished goods and stock in trade minus closing stock of work in progress, finished goods and stock in trade. Okay. Opening stock of work in progress plus opening stock of finished goods plus opening stock of stock in trade minus closing stock of all the three: work in progress, finished goods and stock in trade. It depends on the company. All the three need not to be there in a single company. Suppose it's only a manufacturing company, this won't be there at all. This won't be there. This won't be there at all. If it is a manufacturing company, stock in trade will not be there. If it is a only trading company, then these will not be there. These other things will not be there. Only stock in trade will be there. But now format, we are giving both together. Okay. Suppose the company is doing both manufacturing as well as buying and selling, then everything will be there. Change in inventory. Next, all expenses relating to employee benefit, salary, wage, bonus, everything put together will come under this category. In the trial balance, you will see individual items: salary, bonus, wage, provident fund contribution, employee benefit expense, anything else, etc. All things put together, you have to prepare one small note. In that note, you have to take all the expense, add together and bring it here and you can write it here. In this column, you have to write it. Okay. Then finance cost, which includes interest and any other bank charges. If your company has paid interest or any bank charges in that 1 year, all those things put together will be written under finance cost. Then depreciation and amortization. This is what capex. If somebody told a capex, you are buying some asset by spending 1 crore. You cannot calculate that as an expense now. That expense is not for 1 year. That expense is for several years. If the asset is going to be used for 10 years, 1 crore is the total value of the asset, which is going to be used for next 10 years. Then per year expenses for that asset is, how much is the yearly expense for that asset?
That is based on depreciation value.
10 lakhs.
How much? 10 lakhs. Simple meaning 10 lakhs. That is what we call it as depreciation. The value of fixed asset, which is attributable to the current year's expenditure, is called depreciation. Okay. The same thing if it is for intangible asset, that is called amortization. Amortization. Suppose patent, you bought it for 10 lakh rupee, and that patent you can use it for next 10 years. Every year you will write off 1 lakh. That 1 lakh is coming under amortization expense. Remaining 9 lakh is treated as an asset, which goes to balance sheet. Okay. Apart from these expenses, any other expense is there in the company, all those expenses will be written under, listed under other expenses. Advertisement expense, marketing expense, selling expense, okay, or auditor fee, everything put together will come under other expenses. If it is there in the trial balance, take one by one, make a note, small note, and then take a total, bring the total here.
Professor.
Note number here, yes, sir.
Professor, I have a question.
Please.
This is Nagesh here.
Yeah, yes, Nagesh.
You're saying depreciation. Maybe you gave an example as 10 years for calculating the cost of it. To upfront, is there a definition for calculating whether I can do it for 10 years or 5 years, or is there?
No. There is no definition. You should only decide it. See, when you're buying that asset, you are also asking the vendor what is the life of that particular asset.
Okay.
That life is only 10 years. If the life is 20 years, you have to take 20 years. 1 lakh by 20.
Yeah.
If the life is 10 years, 1 lakh by 10.
Okay.
Suppose at the end of the life of the asset, you are going to sell it for 1 lakh. That time, 10 lakh minus 1 lakh divided by 10 years. That is the depreciation.
Okay. Got it.
Yeah. This is one of the ways in which calculating depreciation. There are so many other ways of calculating depreciation. It's only one method. Okay. Again, the Companies Act is telling you for which asset, which method of depreciation to be used. For which kind of asset, what method of depreciation to be used, they are telling you. But that is not our subject matter. In our exam or in our understanding, the rate of depreciation will be given. Suppose the furniture value is 1 lakh. They will give you depreciate the furniture at the rate of 15%. So we don't worry about the number of years and yearly calculation. Depreciation amount is equal to value of asset multiplied by rate of depreciation. That's another way of calculating it.
Yeah, thank you.
That's what we will do it in the class. Okay. Similarly for amortization also. Okay. Then if you add this A to G, if you add this amount of A to G, you will get total expenses. From the total revenue, which is already there with us, by adding the first two, if you minus this total expenditure, you will get profit before tax. Then if you minus the tax, you will get profit after tax. If you minus the tax, you will get profit after tax. Okay. So this is what the profit available to the company to distribute this to the shareholder. This amount can be distributed to shareholder in the name of dividend, or the company can retain this amount. That is the financial decision of the company, managerial decision, that you will study in the next class, next session. I mean next the semester. That is called corporate finance. How do we distribute this? But we as an accountant, if they distribute, we should have a way in which record that. If you distribute all this amount, no retained earnings will be there. If you distribute a part of this, then the rest of the amount will be called as retained earnings, or it can be called as surplus. Okay. This about the income statement or profit and loss account. Now come to balance sheet. The next statement is called balance sheet. Yeah, balance sheet. This is balance sheet. Look at this. Balance sheet is going to be giving a financial position of a company. That is nothing but asset, liability, and equity. Asset, liability, and equity. You would write like this: name of the company, for which company you are preparing a balance sheet. Then balance sheet as at. This is very important. Balance sheet is for one single day, one single moment. That second only. Balance sheet as at. Okay, the date what you are preparing. Right. Similarly, same format, but balance sheet is consisting of two components. One is asset, one is equity and liability, another one is asset. Two part. In balance sheet, we have two part. One is asset, another one is liability plus equity. Liability plus equity. Under liability and equity, we have 1, 2, 3, 4 headings. Okay, 4. Okay. One is shareholder fund. In shareholder fund, actually there is one more column here that I purposefully removed. Why? In the sense that is not required for us. That is money received by the company on the application of equity shares. All the company will not have. You may be knowing, that IPO is coming on every month. You may see in the newspaper or in the mail. You will get to know IPOs are coming in. If any shareholder is applying to the company, before the share is allotted, the accounting year ends. That time the money is there in the company. That money need to be shown separately in the balance sheet, called as money received against share application pending for allotment. That's one sentence will be there in between these two. I just removed that. Why? In the sense, all the company, all the time, that money will not be there in the company. That's only for format. So I just removed it. That's why it's only 3. Right. So shareholder fund is nothing but the share capital plus the resource and surplus. Resource and surplus. Reserve means so far out of profit, how much you kept it as a reserve for future expansion. Surplus means any profit which is not distributed and it is not kept as a reserve also. It can be done anytime to distribute. You can take that amount anytime to distribute as dividend. But reserve, you cannot take normally to distribute dividend. It can be used for some expansion purpose. But both are retained earnings only. Out of profit, these two are going to be there. As on this particular day, how much is there, you have to write it here. Okay. Then liabilities. Liabilities are 2 types. We already discussed now, current liability and non-current liability, or long-term liability and short-term liability. Under long-term liability, we have the borrowings. In this heading, you have to write the debentures and the borrowings, bank loan, long-term loan if you've taken. If always it is there, if it is taken, if it is there in the trial balance, it will come here. Otherwise, you just leave it blank, 0. Then tax liability, which means the tax payable. Tax payable. Okay, that's called liability. Another other long-term liability means any other liability apart from this loan taken from managing director or loan taken from any one of the directors of the company. That kind of loan will come under these other long-term liabilities. The long-term provisions means any provision which will be used in a longer period of time. What is provision? Provision means a charge against profit. What does it mean? In future, there may be any loss. To record that loss or to avoid that loss in the future, we have to minus the profit now itself. We have to foresee the loss and you have to record that loss now itself, even though it is not happening today. Such provision is called long-term provision. Long-term provision. Suppose you need the money after 5 years to redeem your debenture. 5 rupees you are going to give extra to the debenture holder more than the face value. That 5 rupees loss. How do you make that 5 rupees provision? Every year you make 1 rupee. After 5 years you will have 5 rupees for one debenture. Such provision is recorded in long-term provisions. Okay. Then current liabilities. Other than non-current liabilities, all other liabilities are current, short-term liabilities, which are to be payable, within one accounting year. Okay. So borrowings from banks, which are to be payable within one accounting year. or borrowings from anybody else. Non-banking financial institutions or from anybody. Trade payables means trade creditors, bills payable, that kind of things. Other current liability means any other outstanding expenses. Short-term provisions means provision for bad debts. What is that? In future, your debtor, your customer may not be giving all the amount what he taken from you in the sales. That is loss for you. That is called bad debt. Irrecoverable amount of book debt is called as bad debt. We don't know how much that kind of bad debt will come in future. But out of our experience, we create certain percentage of our total debtors as provision for bad debts. If we created, that will come under this category, short-term provision. Or income tax provision, okay, or provision for dividend, that kind of thing will come under this category. Anything which you provide from the current year which need to be settled in near future, that's called short-term provisions. So everything put together, point number 1, point number 2, point number 3 put together, the total is taken here. That's a total of equity and liabilities. Look at this. 2 and 3 are liabilities. 2 and 3 are liabilities. One is equity. The total of this is equity. Actually, this is equity. This amount, if the company is closed, minimum this amount should come to equity shareholder, depending upon the market value again. So book value of owner's claim is called equity. How do you calculate? From this total, if you minus point number 2 total and point number 3 total, rest will be equity. Or simply take the total of these two, share capital and reserves and surplus, that becomes your equity. Okay. Then second component of the asset is, second component of the balance sheet is asset side. In asset, we have two assets. One is current asset and one is non-current asset. Non-current assets are those assets which are used in the company, used in the business for longer period of time, which are expected to be used in the company for longer period of time. In that also we have two classification. One is tangible, another one is intangible. Tangible, intangible. Tangible, we already discussed in detail. Any asset which can be touched, which can be seen, which has some existence, physical existence, some form. Okay, that is called tangible asset. Land and building, computer, equipment, etc. Intangible assets are those assets which are not having any physical form, physical existence, which can be goodwill, patent, trademark, copyright, etc. Then capital work in progress, if it is there in the trial balance, you have to bring it here. What is capital work in progress? It is nothing but the capital asset, the capex spent but not completed. You are going to construct a building, you bought a land, piece of land, and you just started the work, but it is not completed. How much is the value of that? That will come under capital work in progress. Similarly, if you have any R&D expenses which may result in future some patent or any kind of license, any kind of formula, that is called intangible assets under construction or under development. Then non-current investment. Out of your business, if you have any investment made, that will come under non-current investments. The next item C is tax paid in advance, deferred tax. That means you paid more than the amount what you are supposed to pay. Your amount is in the government of India. That is called your asset, deferred tax. Next, long-term loans and advances given by you. Actually, it is given by our company to outsiders, given to others, given to others. That is why it is coming as an asset side. Loans and advances given to others, which are in the long-term nature. Then apart from this, any other assets are there which are not a short-term, that comes under non-current assets. Example, preliminary expenses not written off. Discount on issue of shares, discount on issue of debentures, that kind of items will come under non-current assets, other non-current assets. Then point number 2 under the asset side is current assets. That is current investments. If our company has made any amount outside our business as an investment, but that is having a short-term maturity period, that is current investments. Inventory. Inventory means the closing stock of the business. It can be a raw material, or it can be work in progress, or it can be finished goods, or it can be stock in trade as well. Okay, anything but this inventory, closing stock, all closing stocks. Next, trade receivable. Trade receivables are two things. One is sundry debtors, another one is bills receivable. You sold goods on credit basis, they did not give the money till. You have some money to be received from the debtors. That is what we call it as trade receivable. The total of that should come here. Then cash and bank balances. You know very well, each and every company will have some cash balance in the hand at any given point in time, and also it will have some bank balance. Put together, we are going to write it here, cash and bank balances. The last but one, short-term loans and advances, again it is given. If you gave some loan to some of your sister concerns, some of your employees, or some of your supplier, you given some advance possibilities there. If it is anything that nature, that need to be accumulated here, and you have to write it in this. Then other current assets. Apart from this, any other thing? Example, prepaid insurance premium, prepaid rent, accrued interest. If that category will come under other current assets. Then if you take a total of these, this 1 and 2, non-current and current, you will get the same amount of what is there in the equity and liability. The same amount should come here also after taking the total. Okay, this is how you have to prepare the balance sheet. I'll just show you for another 5 minutes the balance sheet of one company. Okay, the balance sheet of one particular company, real-time balance sheet, which you may also access to through the internet. I strongly request you, please go to any one of the website of your choice of your own company. Okay, then download the balance sheet of that company and the profit and loss account of that company, and just see. No need of doing anything. Just read that. Just go through that. I'll show you now. I have one. Yeah, look at this. This is the balance sheet of.
Professor, can you adjust the mic again, please?
Okay, it's a balance sheet of one company that is called Ramco Cements. If I'm not wrong, once again. Yeah, sorry, Rajabalayam Mills. That's a textile manufacturing company. Okay, that company's balance sheet and income statement. Look at this, the same format what we studied. Income from operation, finance income, other income, everything is there. This is how they found out. And the chartered accountant should sign in this. This will be attached to the annual report of the company, balance sheet and the income statement. The last one, audited one. Okay. This is again balance sheet. You go through this once you have time. Any one of the company's balance sheet, especially manufacturing companies' balance sheet and manufacturing companies' profit and loss account. Okay, now take 10 minutes break. After coming back, we work out one question on this particular preparation of balance sheet and preparation of statement of profit and loss. Before we go for a break, if you have any doubt in this format or in this concept, you please ask me. I'll tell just in 1 minute the sum of what we have done so far. Each and every business will be interested in knowing about their profit or loss and also the financial position of the business on any given point in time, or at least once in a year. That is being achieved in accounting by preparation of two statements. One is profit and loss statement, another one is balance sheet. These two are combined together. We call it as financial statements, or we simply call it as final accounts. Final accounts or financial statements. Okay. Every business organization should prepare this, but especially company form of business organization should compulsorily prepare it, and it should be made available for the public to see that. Not only to the shareholder, but also to the public. So accounting is having more relevance in the joint stock company form of organization because it has management separated from the ownership. So we are studying here only the financial statement of joint stock companies. All the basic principles of accounting to be followed to prepare the financial statement of the joint stock company, in addition to the rules and regulations and the provisions given by the Indian Companies Act 2013. Such provisions, such regulations are mainly in format. So that format to be known to all of us, that format only we have discussed so far. From the profit and loss account, we come to know what is the profit. From the balance sheet, we come to know what is the financial position of the company. Okay. In balance sheet, only we record assets, liabilities, and equity. In income statement, we will write only income and expenditure. Okay. To prepare a financial statement of a company, we need trial balance. And we need some additional information with regard to that company's position of that particular date. Any adjustments, any unrecorded transaction. Adjustment means unrecorded transactions. Okay. With the help of these two, unrecorded transactions and trial balance, we will try to prepare a profit and loss account and the balance sheet. Okay. And one more final point, that is, if you have unrecorded transaction, what is unrecorded transaction? After the trial balance, after the statement of trial balance, we will be given with some information that is called unrecorded transactions that need to be recorded in two places. One is in debit side, another one may be credit side. So far, we have not discussed anything debit side and credit side, but normally balance sheet asset side can be compared with debit side of the account, and the balance sheet liability and equity side can be treated as credit side of the account. Similarly, in profit and loss account, income and other income, that first, the top line of the profit and loss account can be treated as credit side, and starting from expense till the last, we can treat that as a debit side. Okay. So any item given after the trial balance need to be recorded in two places. One is in debit side, one is in credit side. Meaning one can be in either profit and loss account and another can be in balance sheet. Okay. So keep this in mind, and after the 10 minutes, we can start working out the question on preparation of financial statement of a company. Okay, before we wind up for the next 7 minutes, 3 o'clock we'll leave for break. Any doubt you have with regard to this financial statement of a company? The format and the concepts. We have some 5 minutes, 5 to 6 minutes. Anybody has anything to talk?
Professor Deepika here.
Yes, yes, Deepika.
Maybe when you are explaining in detail, right, with an example for this P&L statement or else balance sheet, if you talk about the examples little bit slow, I think it will be easy to at least.
No. That will be done when we are taking some number and some item exactly.
Okay.
In this question, that will be done, because in the format, that much we can understand on the major items, the major headings. Inside that, what all will come, only understand the meaning, how it is coming. Suppose, say for example, under the fixed asset, we have two things. One is tangible, another one is intangible. Under tangible, what will come? I already told you, building, land, and etc. But if you go to the specific question like this, look at this, is a question. If you go here, see, look at this, machinery is there, furniture is there. That time I will tell you in detail each and every item where it will come. That time you will understand it more better. Yeah, that time will be slow.
Yeah, because when we were talking about assets, it was fine. But when we were talking about like the non-current investments or else like
non-current investment is something amount invested outside the business. That's it. Outside the business. Suppose you are a company, you have some surplus money with you. You don't want to have that money in your business. You don't have any business opportunity. You are taking that amount and buying a other company's equity share, other company's debentures, or you're keeping something in the bank account. Fixed deposit you're opening 5 years and you are locking it that 5 years fixed deposit. So that becomes your non-current investment. In the trial balance, there will be a sentence called investment. You take that and write it in non-current investment.
Okay, so like things like those are like little.
No, it's the first time. If you are seeing first time, it will be definitely little information is required or little more explanation is required. I will do that in the next 1.5 hour when we are going with the individual item in a trial balance. I do that.
Okay,
Sure.
thank you.
Anybody else? Has any doubt? So you have to remembering this. You have to be remembering this format. Without this format, you cannot do anything. This format, what we studied here now, for both balance sheet as well as the profit and loss account.
So in exam, we will be given this format, sir, or else we have to write.
We'll be giving you the mark. Format you want.
Okay. No, I was just
format, if you do 1 or 2 questions, you'll be remembering it.
Okay.
Simply now also you can recollect. Now first sales is there and other income is there, total income, then all expenses. Only A, B, C, D, E, F, G, all expenses minus, then you are getting the profit.
Okay.
If you do 2, 3 questions, the format will be remembering by you.
Sir, this is Shashank.
Tell
For the assignment, do you want us to submit in like a Word document or Excel, like Excel sheet?
Is that not clear in the assignment information? Anything? Anybody has studied? I forgotten actually. Anybody has read it clearly in the assignment? That point is not explicitly told in what file format you have to submit it. Anybody?
Professor, I think you were told we can do it in Excel, but then we copy it in Word and submit as PDF.
Yes. That's what the information I gave in one day. But is it not clearly mentioned in the assignment? If not, please keep this point. You can do it anywhere. You can do it in a paper, you can do it in Excel, you can do it anything, no problem. But finally, you have to convert that into PDF file and your assignment to be submitted only in PDF format.
Thanks for clarifying.
Any difficulty will be there? No difficulty, no. Only
No,
thing
just
is 5 minutes you have to spend to convert. That's the only difficulty. But
no issues. I got the point.
Yeah, you can do it. You can do it. Yeah. Almost you might have done 60% of your assignments till this week. After this week, you can complete the rest of the 40% and you can submit it. This is the later part of your first assignment, no? Preparation of financial statement. By this time, you should be ready with your trial balance. If not, please start it immediately. You may not have time. Any other doubt with regard to the concept of financial statement and the format of financial statement? Okay. If not, we can just pause for 10 minutes and we can resume at 3:10. Okay. And one more information, any time, any day except Sunday, during 7 o'clock to 8 o'clock, you please call if you have any doubt, any assignment doubt or any other doubt, you can just call. We can't complete all those things only in these 3 hours, okay, because you are all more in number, 40-45 students are there, individual attention we cannot give for assignments in the class itself. So if you have any doubt, don't think that it is small or big or it is I may think it is idiotic or unusual or something kind of small. Don't worry about that. Okay, you ask. If it is there, I can tell you. Okay. You can call me or you can WhatsApp me. Somebody is WhatsApping me, but it is not clear. I'm not able to answer it very clearly. You can call it without any appointment. You can call every day during 7 to 8:30 that time. I will be relatively free. I will be answering to you, especially in WhatsApp call. That is better. Yeah. Thank you. See you at 3:10. Okay. So now that is opening stock done. Interim dividend. What is dividend?
Liability.
Debit.
Distribution of profit out of.
First, yeah. Distribution of
out of
profit.
Distribution of profit to the shareholder is called dividend. So it is neither a loss nor a expense, not an asset. It is nothing. It is appropriation of profit. Remember?
Yeah.
Appropriation. Out of profit, what you do? That is called appropriation. Profit management, earning management. So dividend comes under earning management. If you give profit to the shareholder, it is called a dividend. So it is used to calculate the surplus money, surplus of profit. Profit minus all distribution is equal to surplus. Okay. Next, the dividend what is paid on the tax what is paid on the dividend is called the corporate dividend tax. I explained here to all of you. Please listen for 1 minute very carefully. Now it is not there in the next year onwards. It's not going to be there from the budget. Okay. Now I'll tell you what it is. If you receive dividend from the Indian companies, domestic companies, in the capacity of shareholder, that money what you are receiving as dividend is income for you. Will you agree? Suppose you are the shareholder of Infosys Limited, that is giving you 10,000 rupees as dividend. The 10,000 is income for you? Yes or no?
Professor.
Yes.
Yes. For that income, you have to pay income tax according to your slab, according to your category, according to your total income. Okay. But now in India, to encourage the people to invest in the equity market, Government of India was telling dividend in the hands of the shareholder is exempted from tax. You need not to pay tax on any dividend what you are receiving from Indian companies. But at the same time, the issuer of the dividend, the giver of the dividend, the company which is giving dividend should pay tax on behalf of the shareholder. That tax is called as corporate dividend tax. But normally what the companies will do, instead of giving 100 rupees tax without, 100 rupees as dividend without tax, they will give 90 rupees dividend with 10 rupees of tax to Government of India. So both put together is the amount of dividend for the company. But you will receive only 21,368. That is you, shareholder. Company, they will calculate the total as dividend only. So this total amount is dividend. To pay 21,368 rupees as dividend to the shareholder, the company has paid 3,632 as tax on the dividend to Government of India. So company will do like this. Company will calculate the total dividend minus the tax payable on the dividend. The rest of the amount will be paid to the shareholder in the name of dividend. Okay. So all these put together is dividend for our calculation. Though it is a tax and dividend two separately is given, but for us it is both together only. Instead of giving 25,000 as dividend, they are giving 21 as dividend and 3 as tax. Okay. Next, audit fee. Expense. Next, profit and loss account. What is this profit and loss account coming in the trial balance? It is nothing but the profit made by the company up to now. Up to now is 27,000. Up to now means before this year, before this 2021, up to 2019-20, the company's undistributed profit is 27,000. Okay. So it is a reserve, actually surplus, reserves and surplus category. Next, tools. What is tool? It's a kind of inventory. It's a kind of inventory. So current asset, it's an asset. Preliminary expense comes under which item? What is preliminary expenses actually? The initial expenditure.
At the beginning of
the initial expenditure, what is spent by the company to start the company actually. Legal expenses, registration expenses. In your assignment also I given you 1 lakh rupees a registration expense. So all those expenditure which are incurred by the company before the incorporation of a company will be called as preliminary expenses that need to be written off over a period of time. The amount written off will be taken as expense. The remaining amount will be taken as asset, non-current asset. I repeat again, The expenditure which are incurred to form a company, incorporate a company is called as preliminary expenses. Example, legal charges paid to auditor in the beginning, or registration fees paid to the government of India, or any other brokerage or any other charge you are giving to the any other consultant, all those things before incorporation. Okay. Now, the total amount you cannot consider as an expense in one single year, because the expenditure what you spent on such incorporation is going to be there for so many years benefit. So you need not to charge all the amount as expenses. You need to take a part of that as expense. Remaining you consider as a other non-current asset. Over a period of time, you'll just write off, just like a fixed asset. 60,000 is there means the management may decide, okay, sir, next 6 years, 10,000 will write off. So every year 10,000 is taken for profit and loss account expense, and the remaining amount will be taken as asset. Is it
Professor
clear?
Rajesh here.
Yeah.
We understood the preliminary expenses, but now after 3 years of registering entity, and then I'll have to go to.
Please, be clear, yes.
Okay, now I have enrolled in shops and establishment.
Okay.
I have got 3 years of basically 3 years is the certificate I get it. After 3 years, I'll have to renew it for another 3 years. Now, after when I do the renewal for the next 3 years, even that expense, how do I consider? Because that is going to happen for next 3 more years.
How do you consider the first 3 years expense?
We have considered under preliminary expenses.
Same way you do it for the next 3 years.
Okay.
Simple. Suppose you are paying 30,000 rupees first year. First year 10,000, second year 10,000, third year 10,000, write off. Fourth year you are going again paying another 30,000. That will be a preliminary expense. In the fourth year 10,000 you are charging. Fifth year again 10,000. Sixth year again 10,000. Sixth year it becomes 0. Seventh year again you are getting 30,000 rupees. Then it goes on like that.
Okay, thank you.
Yeah. So debentures. Next one is debenture means the loan taken from the public. The loan taken by the company from the public for a period of time at some rate of interest. Okay. That's a liability or income or expenditure, what it is?
Liability.
Liabilities.
It's a liability. Interest on debenture? Interest on debenture?
Liabilities.
Expense.
How it is liability? Interest paid on debenture is?
Income.
If you are having confusion, I'll write it here. Interest
It's
paid on
income, right, sir?
expense. Income you will pay, income you will receive.
Oh, sorry.
Yeah, income is received. Expenses are paid.
Paid,
So
paid.
it's interest paid, it's an expense. Okay, next. Investment.
Assets. Set.
It's an asset. Yeah. Goodwill.
Asset.
Insurance and taxes.
It's expense, sir.
Sorry?
Expense.
Expenditure, yes. Printing and stationery.
Expense.
Cash and cash balances.
It's assets, sir.
Assets.
So we have classified. First you take a pencil in the exam. If you have a paper like this, you just mark like this or write it nearby. A, E, like that for your understanding. While you're reading it itself, you write it. Then next come to adjustment.
Your voice is low, sir.
The directors are telling there will be a dividend of 25% on the paid up capital. What is the paid up capital here? Paid up capital means this 3 lakhs minus uncollected capital. 2,84,000 is the paid up capital. On that 2,84,000 rupees, the board of directors are willing to pay dividend of 25%. You have to calculate 25% on 2,84,000. That's a dividend, final dividend. We'll discuss that a little later. Similarly, preliminary expense written off is 25% and goodwill is written off 10%. What is mean by written off? From the amount of preliminary expenses, take 25%, consider that 25% as current year expense. Remaining amount is considered as asset. Similarly, goodwill. Goodwill is given in the question as rupees 52,000. From 52,000, you are taking 10% as written off. Written off means that value is coming down, so you are debiting to profit and loss account. You are writing in as an expense. The remaining amount will be there in the name of the goodwill in the balance sheet asset side. Similarly, building and furniture, depreciation on building and depreciation on furniture also. Okay, and from the profit of the current year, we have to take 60,000 rupees and transfer that amount to reserve. Okay, so the reserve of the company will increase. Last year, the reserve was how much? 2,50,000. Now they are creating a further reserve of 60,000 rupees, so it will become 3,10,000. And insurance is prepaid. How do you do this insurance prepaid? What is the amount of insurance in the question? Insurance paid by the company in the year is
20,000.
20,000. Insurance paid in the company is 20,000 rupees. Okay, but in the 20,000, 1,500 is prepaid. Prepaid. So you have to minus this. Yeah, we have to minus this 1,500. This 1,500 will be the asset for the company under current asset, other current assets. Okay. Though you paid 20,000 rupees as insurance, but only the relevant insurance for the period is only 18,500. That much only you have to take, consider as insurance under expense column of the profit and loss account. Then closing stock, which can be used for calculating the changes in inventory. Changes in inventory. Okay. With this understanding, we can now take the solution for this question. First, we can prepare the income statement. Income statement of the company. Okay. I'm just taking the format. Okay, the format is taken. Revenue from operation, other income, total revenue. Okay, minus expenses. Expenses. One by one, A, B, C, D, E, F, G. Then total expense. Okay, total expense minus profit. Sorry, if you minus total expense from the total revenue, this is total revenue. No? From this total revenue, if you minus total expenses, you will get profit before tax. If you have any tax, if you minus that amount from the profit before tax, you will get profit after tax. That's it. So you keep the format ready with you. Before you start writing the number, you write this format first. Okay, particulars, note number and amount. What is note number? If this amount is 1 lakh, how did you get that 1 lakh rupee? Some plus minus can be there. That need to be shown in a working note. That note to be numbered. That number is note number. Okay. But that note number should actually start from balance sheet first item. What is the note in the first of balance sheet? That should be numbered as 1. 1, 2, 3, 4, 5. Suppose the last item in the balance sheet is numbered as 11. Then 12 will be the first number of income statement. Actually, balance sheet is the first statement, income statement is the next one normally. But we will prepare profit and loss account first and balance sheet next. That is why this number is coming like this. Okay. Revenue from operation. How do you know revenue from operation in this company? What is the revenue from operation? Please tell me. How do you find out the revenue from operation? Yes, are you all there?
It's a sales.
Yeah, sales only to be taken as revenue from operation. Sales is the base to calculate revenue from operation. How much is the sales?
525.
5,25,000. And there is a sales return. Look at this. There is a sales return. How much it is? 15,000 rupees. So the net sales will be the revenue from operation. So 5,25,000 minus 15,000. That need to be written in a note.
Professor, why don't we consider that amount of creditors balance?
Who is creditor? What is meant by creditor? What you are calculating now? You are calculating revenue from operation. What is revenue from operation? The money what you are earned out of your core activity of the business. Creditors mean to whom you have to pay money. Amount payable to outsider for the purchase of raw material, for the benefit of service you enjoyed, or for the any goods you taken from them on credit basis. How you have a connection between revenue from operation and creditor? What is creditor? Creditor is a person or a vendor to whom we have to pay money in future for the purchase we made from him in the previous days on credit. Can you give me a justification? Why do you think like that? Why creditor should be coming under revenue from operation?
No, Professor. Actually, a little confused. I think
Please tell
debitor,
me, no
I mean to
problem.
say.
It will be like that only. Beginning, it will be like that only. Because you are not knowing accounts before. No, it should be like that. No problem. But just tell me, I will
I
understand
mean
what
to
is creditor.
I mean to say debitor. It seems actually we
Okay,
are
debtor. Fine. Now I got a point. Now what is the logic you are telling? I can understand. Everybody can understand that debtor is nothing but from whom you have to collect money. So that could be a revenue. That's what you are thinking, right?
Yes, Professor.
Yeah, correct. You are right. You are thinking correctly. But the debtors are already included in sales. Why that? Why the people are debtors for us? They already taken goods from us. We sold goods to them. Suppose you are selling goods to a debtor, a customer. What's the entry you will make? Debtors account debit. Debtors account debit. Or the name of the person. Debit to sales. The debtors account debit to sales, or debtors means any person name. Mr. D. Mr. D account debit. Mr. D account debit to sales. So whatever the amount is there in Mr. D as debtor, that is already included in sales. Okay. Suppose you sold it for cash. That time also cash account debit to sales. If you sold it for check, that time bank account debit to sales. So these are the only three possibility where you make a sales. In all these cases, the respective amount of sales is included in sales account. When you prepare a sales ledger, you will take all these amount. In this 1 lakh is there, you will take to sales ledger. If you take here 2 lakh is there, you take to sales ledger. If you take here 3 lakh is there, you take to sales ledger. The total sales become 1 plus 2 plus 3, that is 6 lakhs. That 6 lakhs will be represented in, or 6 lakhs will be revealed in sales account of the ledger. That will go to the trial balance. You remember, that will go to the trial balance. Sales account ledger balance will go to trial balance. That trial balance only is given to us here. That amount is only how much? That amount only 5,25,000.
25,000.
So this 5,25,000 includes credit sales as well, cash sales as well, sold through bank balance also. All sales put together is 5,25,000. If you have 5,25,000 only cash sales, then you have to add the credit sales also. Credit sales. But in the trial balance, we may not have a sales of two nature, credit sales and debit, cash sales. If it is given, they will give like this: sales, under that credit sales and cash sales. If it is the case, you have to add the both sales together and you have to minus the sales return. Got it?
Got it, Professor. Thank you.
Yeah. So sales minus sales return. Sales minus sales return. That is done here. That is what your revenue from operation. Forget about this note number. You can give the number later. You can give the number. We don't know what is the number is going to be there. Okay. So you prepare just note revenue from operation, sales minus sales return. Sales minus sales return is equal to revenue from operation, revenue from operation. So this amount to be taken and written in profit and loss account as a first item. Okay, 5,10,000. Next, other income. In this question, there is no other income, so we leave it blank. It can be interest received, it can be any commission received, any kind of income other than sales. If anything is there, you take a total of that and write it here. Okay. Next, if you add these two, you will get total revenue. In this case, the same 5,10,000 is the total revenue. Next, we have to concentrate on expenses. What are the expenses are there? This is always there in the format, so we'll go one by one according to the format. So material consumed. What is material consumed? Material consumed means opening stock of raw material plus purchase of raw material minus closing stock of raw material. But in this case, there is no such information about purchase of raw material, so it is nil. Look at this, there is one purchase here. Purchase and sales is here, but this purchase is not purchase of raw material. There is, yeah. For your more clarity, I'll write it purchase and sales of stock in trade. This company is just buying and selling, it's not producing anything. That's the meaning. Purchase and sale of stock in trade. Okay. If it is given purchase of raw material, if this 2,10,000 is purchase of raw material and this opening stock, look at this, there is opening stock. Yeah. If this is opening stock of raw material, then you have to take it here. Material consumed is equal to opening stock of raw material plus purchase of raw material minus closing stock of raw material. But in this question, such items are not there, so I'm just ignoring it. I don't want to write, so I will write nil, or I can write simply 0 or blank. Material consumed. Any doubt? Material consumed is nothing but raw material consumed. Raw material consumed will come only for those companies which are doing manufacturing. If your company is just a trading company, buying and selling, there won't be any material consumed. Okay, so I'm leaving it blank. Next, purchase of stock in trade. So there is a purchase of stock in trade. Look at this. Purchase is there. Purchase. How much is there? Purchase 2,10,000. Then there is a return. Then 20,000 rupees return is there. 20,000 rupees purchase return is there. So 2,10,000 minus 20 is equal to net purchase. Look at this. 1,90,000. So for that, I'm just making a small note here. A small note: purchase minus purchase return. Purchase minus purchase return. Okay, a small note. This is net purchase. Net purchase of stock in trade. Stock in trade. Okay. Purchase return. Purchase returns. So this 1,20,000, I'm taking it and writing here in the profit and loss account against the purchase of stock in trade. 1,90,000. Okay. Next, change in inventories. What is change in inventory? How do we calculate? Opening stock of finished goods, opening stock of work in progress, plus opening stock of stock in trade, minus closing stock of work in progress, closing stock of stock in trade, and closing stock of finished goods. I write it here. Opening stock of finished goods, work in progress, and stock in trade, minus closing stock of all these things. Closing stock of all these things. That is what we call it as change in inventory. Look at this question. There is no finished goods opening stock. In this question, there is no. Okay. There is no work in progress. But stock in trade opening is there. How do I know? Look at this. In the trial balance, anything is given as a stock, that is opening balance. In the adjustment, if anything is given, that is closing balance. Look at this, this is closing and this is opening. Where is it? Stock was there, no? Once again. Where it was? Please check it.
Yeah, 65,000, Professor. Opening stock 65,000.
Where it is? Yeah, it is here. Yes, yes. Okay. Opening stock. So this is opening stock of opening stock in trade. Opening stock in trade, actually. Okay, it is closing stock in trade. Closing stock in trade for your better understanding. That's better. Opening stock and closing stock. There is no work in progress. There is no finished goods because it's a trading company. It cannot be there. So one take this 65,000 and then 80,000. Okay, 65 and 80. Come to the working note. Yeah, change in inventory. Opening stock in trade minus closing stock in trade is equal to 65 minus 80. This is minus, no? 65 minus 80. So it's equal to minus 15. So that is called change in inventory. Change in inventory. This 15,000 should be recorded in profit and loss account. 15,000 is recorded in profit and loss account under change in inventory. Under change in inventory. 15,000. Okay.
Professor,
Next.
one question.
Yeah.
When you are saying opening stock, doesn't it mean like it's an asset?
Yes, it's an asset.
Okay.
It is an asset, but actually, even raw materials are asset only. See, it's an asset. It was there in the last year balance sheet under the current asset in the name of inventory. When it comes to the next year, we are going to use it now. See, when it is a opening stock in this current year, what is opening stock? Some material will be there. Some customers are coming. They're asking that material. We are selling it. That means to make that sales, I spent this amount of money on this stock. That is why it is taken here under change in inventory. So closing stock is again
next
asset
year
only. It will be going to balance sheet under asset side. Which one? This 80,000. This 15. Please understand. This 65. This 65 has become 80. This 65 has become 80. How it will become 80? It is not just becoming by magic. The 65 was there. I bought some more goods. Put together, I sold some item. Left out item on the end of the accounting year is valued rupees 80,000. That is why my opening has become 80,000 as in the end closing. Okay.
So in that case, if it's an asset, we thought like we should be using them in balance sheet, right? That's
correct, madam. Correct. It is in balance sheet only. Please understand. This opening stock is nothing but the inventory. It is there in the balance sheet of the last year. This amount is there in the last year balance sheet only. But now it is not today available with you. Today available is only 80,000. Opening balance is the day one balance. But you are preparing a trial balance. I mean, you are preparing a balance sheet as on 31/3/2021. This balance 65,000 is on 1/4/2020. But the balance sheet what you are going to prepare now is 31/3/2021. So this 65 is not there on 31/3/2021. This 65 has become 80. How it is become 80? I had 65,000. One second. I had 65,000 worth of material with me. I had 65,000 worth of material with me.
But we are preparing profit and loss statement, no, Professor?
We are not taking that 65,000 in profit and loss account. Please understand that I'm trying to explain. 1 minute, wait. So the 65,000 rupees is the opening stock of raw material, and we bought some more material. We bought some more material. Worth rupees, how much? Worth rupees 1,90,000. Worth rupees 1,90,000 we bought. Okay. Now we sold how much? Look at this. We sold for how much? 5,10,000. 5,10,000 is including profit also, but we don't know internally how much worth of material was sold for 5,10,000 rupees. So now the sales to be minus should be equal to your closing stock. Your closing stock. Now the closing stock given in the question is 80,000. Look at this. This is 80,000. 80,000. Now, how much I sold? Look at this. 80,000 should be equal to sales minus 1,90,000 plus 65. 65 plus 1,90,000, how much? 2,55,000. 2,55,000 minus the cost of sales. I'm not writing sales value here. I'm writing cost of sales. Look at this. It's a cost of sales. Cost, because in the sales value, if you raise a sales invoice, that includes profit also. Okay, so to find out the cost of sales, I'm going to use this opening stock. Look at this. If you minus from 2,55,000 the cost of sales, that should be equal to your closing stock. Your closing stock is how much? 80,000. 80,000. So how much is the cost of sales?
1,75,000.
1,75,000. Cost of sales will be 1,75,000. So cost of sales 1,75,000. Instead of doing like this, I am just taking the difference. Look at this. This difference only. This and this. The difference. How much is the difference? Minus. 15,000 is the difference. 15,000. Is it 17,500 or how much it is?
1,75,000.
5,000. Okay. Now you see, instead of doing like this, what I'm doing, this and this, the difference I'm taking. What is the difference? 15,000. That 15,000 I'm minusing from this 1,90,000 to know the exact cost of sales. That is why that opening stock is taken here in the profit and loss account to find out the exact amount of cost of sales. Cost of sales is 1,75,000. Really, but we are not doing like this in the this is old method. This was the old method we have done in the previous format. But now they are telling you, please give the only change in inventory. How much it was and how much it is today. Automatically that will get affected. That will give impact in the cost of sales. Look at this. Purchase was 1,90,000 minus 15. What is the net effect of this? What is the net effect?
1,75,000.
75. Look at this. Cost of sales is 1,75,000. Suppose if your closing stock is 55,000. Closing stock is 55. Then how much will be cost of sales?
2 lakhs.
2 lakhs. Okay. Similarly, it will come here. The amount of difference between these 55 and 65. 65 minus 55 is 10,000. So 10,000 will come as positive here. So the net effect will be 2 lakhs. For that reason only we are taking here. We are not writing the opening stock here as it is an expense. We are finding out the cost of sales. Actually, cost of sales, for other way of finding out cost of sales is equal to opening stock of material plus purchase of material, purchase plus expense if anything is there. Okay, plus expense anything is there minus closing stock of material, closing stock. This is the way you have to find out your cost of sales. Instead of doing this, we are directly doing this in the statement, the net effect. These two put together is cost of material. If any other expense is there, if you add that also, that becomes your cost of sales. That is why we are taking this stock in the profit and loss account. Okay, it is not taken in profit and loss account. It is used to find out the change in inventory. What is change in inventory? The plus or minus from the opening to close. That's it. Are you getting anything now out of this? That's all. Still you are having confusion?
To some extent, okay, Professor. Maybe I'll try and then.
Yeah, you try later. And see, if you've done accounting already, definitely you have a confusion. If you don't have accounting done, you'll just follow this. I'll tell you, cost of sales is not revealed to the people. See, the statement is available for everybody. If you tell here the cost of sales explicitly, then your competitor or other people will come to know what is your cost of sales. Of course, in finally also they are going to come to know what is your profit. That is true. But explicitly, instead of giving the cost of sales here, we are giving like this as per the format. That's all. So 15,000 is the change in inventory. Meaning, even though you bought your inventory for 1,90,000, you used it only 1,75,000. That's the meaning. Okay. 1,75,000 only the effective amount of goods used for sales. Cost of sales. Okay. Next. Employee benefit expenses. Look at the trial balance. Wherever the employee benefit expense is there, you take that. What is there? Wage is there. Wage is there. And then salary is there. Then that's all. Only two are there. Okay. So go to the statement. I mean, go to the working note. Note number 15. Employee benefit expense. Note number 15. Okay. Note number 15. You can give the number later. No problem. So employee benefit expense. Wage is 30,000. Salary is 60,000. So total is 90,000. Total employee benefit expense is 90,000. Suppose there is a sentence given in the adjustment. There are 3,000 rupees still payable to the workers relevant to this current accounting year. That time what you do? We have to add that 3,000 with this 30,000. That expense is called as outstanding wage. We have to add that 3,000 and we have to show that 3,000 as liability under current liability in the balance sheet. If it is prepaid wages out of 30,000 rupees, 5,000 rupees is paid for the next year. If that is the case, you have to minus that 5,000 from this 30,000. You have to take the effective wage as only 25 and the remaining 5 you have to show it as a asset under current asset side. Okay, wages paid in advance. In this case, nothing is there like that. So we take just the total. 90,000 is the employee benefit expense. We bring it to profit and loss account in the heading called employee benefit expenses. Okay. 90,000. Next is their finance cost. Look at the balance sheet. Look at the trial balance. Anything relevant to payment of finance cost. Look at this. Interest paid on debenture is there. 14,000 rupees. So that comes under here. Interest paid, finance cost. If there are any more interest, you add that. You bring the total interest here. Only one item, so no need of note number, directly I return. Next comes depreciation and amortization expenses. Here we have certain depreciation. One is on building and furniture. Another one is on goodwill. Okay. What is the value of building and what is the value of furniture? You have to check it. Then on that, you have to find out 2% and 5% respectively. Similarly, on goodwill, you have to find out 10%. Come to the trial balance. Where is the asset? Yeah. Where is the asset? Yeah, it is here. Look at this. These two are the asset. Machinery 89,000, furniture 80,000. Similarly, goodwill. Goodwill is 52,000. So on these three items, you have to find out the percentages. Yeah, this is a table which gives us the depreciation calculation. Look at this. Depreciation 2% on building. Building value was 1,80,000 in the trial balance. On that 2% is 3,600. Furniture value in the trial balance is 80,000 rupees. 80,000 rupees. On that, 5% is the rate of depreciation. So 2% and 5% respectively, taken 3,600 and 4,000. Similarly, goodwill, 10% is the value to be written off on 52,000. That is 5,200 total amount of depreciation and amortization. Depreciation and amortization. Okay. Any doubt in this? Just to take the value given in the trial balance of the respective asset and take the percentage of depreciation or write-off given in the adjustment and take that value, add it together, that is the total amount of depreciation, 12,800. That need to be written in profit and loss account under the heading called amortization and depreciation.
Professor,
yeah.
Amortization means you said intangible assets pay we have to calculate.
Yeah, goodwill is intangible only, no?
Oh, okay.
Yeah, goodwill is intangible only. That's why.
But that's not an expense, right? That will be like profit.
It's not an expense.
Means goodwill means what you are earning, right? It's not like an expense, no?
Goodwill is not an expense actually. Goodwill is the
income
extra money, not income. Goodwill is an extra money what you paid. Suppose you are buying a business. I have a business, I'm selling to you. The net value of my business is only 90,000. But I am telling you, I can't sell this business for 90,000. I will be selling only for 1 lakh. If you are okay to buy, you are giving me 1 lakh, you are taking the business of worth rupees 90,000. So when you are writing in your books of account, what entry you will make? The various asset what you purchased from me will be debited, but that is worth rupees only 90,000. Look at this entry, various asset, various asset account debit, worth rupees 90,000, worth rupees only 90,000. But how much you paid for me?
1 lakh. Yeah.
1 lakh. So the credit side, credit what goes out? What is going out? Cash goes out. Suppose it's a cash deal, cash goes out.
So that is income, right? Revenue or income you can.
Wait, madam. What is revenue here?
1 lakh.
For whom?
No, sorry, 10,000. Sorry.
For whom?
For various assets, like who is owning the.
You are buying my business. Take an example. You are buying my business. I am selling my business to you.
Okay.
Whom it is income?
You made the income.
The entry is in whose book it is?
Okay, in my book it will become as an expense.
In your book, the entry is made now. So it is going to be 1 lakh. There's a difference of 10,000 rupees.
Correct.
That 10,000 rupees only in accounting we record it as goodwill.
Okay, sir.
Now you tell me goodwill is income or loss?
Again, depends on whose account you are writing.
For you, what it is? Why you are confusing? Why? Nothing is depending. Everything is clear. Now, for you, what is this 10,000?
For me, it is an expense.
Profit only. Money.
Huh?
Expense.
Some sir is telling something. Yes, sir. What is that?
Sir, it's expenses. Like this one, we can consider as a commission, sir.
Where from commission comes in, man? Where from commission comes in? I am a business owner. I am just letting my business to be taken over by you. For that, I am asking 1 lakh rupee from you directly. You are giving me directly 1 lakh rupee to me.
Okay.
I am surrendering to you 90,000 worth of assets. But you are giving me 1 lakh worth of money. 1 lakh hot cash you are giving to me. Where from the commission comes in? For my own business, I am selling to you for a commission. Not possible, no?
Okay, sir.
Yeah, the extra money what you paid for buying a business is treated as goodwill. Now
Goodwill. Yes. I also given, sir, around 20 lakhs given for buying one company. I also paid goodwill 20 lakhs.
That's it. It is always there because
last year I purchased one company. So in that I given 20 lakhs goodwill for him. For establishing the organization.
Correct. He has already established for you. He is having a business place. He is having a customer. You are taking a running business. Ongoing business. You need not establish anything. Not even a visiting card to be made. Only the board name that if you want, you can change it. Otherwise, you can keep the same board also. So that kind of comfort is there. For that, you are paying extra money. That money is called goodwill. Now this goodwill is going to be written off over a period of time, because you are believing that if I take the business for 1 lakh also, I can make extra profit, super profit. Out of that super profit, I can just write off the goodwill over a period of time. Instead of you start a new establishment and establish that with the community, with the society, with the customer, that takes a lot of time. That gives a lesser profit for initial stage. But if you take an ongoing business, that gives you the immediate profit. That out of that immediate profit, you can write off the goodwill. Actually, goodwill is burden to the company. Actually, you just think that goodwill is reputation. Yes, but this goodwill of 10,000 is whose reputation now? Is it your reputation or my reputation? This 10,000. Whose reputation? My reputation. For my reputation, you paid. For my reputation, you paid. You bought my reputation for 10,000 rupees. So that need to be written off over a period of time from the amount what you earned, out of my reputation in the next coming years. That is why goodwill need to be written off over a period of time. It is called writing off of goodwill. Okay. So now the goodwill is written off over a period of time, not immediately. All the 10,000 cannot be written off in single year. If I do that, my profit of the year will be drastically come down. I don't want to do that. Okay. That left to the management. According to the law, it is left to the management. Okay. Right. So where we are now? Yeah, we are now here. Done. So other expenses, now go to trial balance. Take all the expenses left out apart from that A, B, C, D, E, F and G. Sorry, E, F, that's all. Look at the trial balance. What expense is there? Director fee is there now. First one, 20,000 rupees. And then freight is there. Selling expense is there, 10,000 and 5,000. Audit fee, 15,000. Preliminary expenses not full, but how much to be written off? That much. Insurance and tax, printing and stationery. These many are there. So look at the preliminary expense. Only 25% is to be taken as an expense, remaining to be taken as asset as it is. So come to the working note. Write all the expenses one by one. Wage, salary. Okay, it's over. Sorry, that's over. That's not other expense. Yeah, this one. Yeah, other expense here. Director fee. Whatever we've seen so far, director fee, freight, selling expense, audit fee. Only in insurance, there's an adjustment. They told in insurance, out of 20,000, 1,500 is still unused. Premium is unused. So the 1,500 need to be taken out. So only effective insurance premium is to be 18,500. Similarly, preliminary expense written off. Preliminary expense given in the question as rupees
60,000.
60,000, but it is told here only 25%. So 60,000 on 60, calculate 25. That becomes 15. 60,000 on 60,000, you have to calculate 25%. 25% on 60,000. 20% on 60,000 is equal to 15,000. Okay. So the total of this is other expenses. Total other expense 98,500. 98,500. Okay. Then total expense is nothing but the total of all these things except this. This income. Okay. This income. These are all expenses. These are all expenses. Okay. Total expense. If you take a total, how much total? 190 minus 15 plus 90 plus 14 plus 12.8 plus 98,500. How much? Any quick calculation? Not possible. How much? Quick. We have one more balance sheet also to be done. Yeah, how much, sir? Okay, all of you are waiting for somebody to tell.
389, sir.
How much, madam?
3,89,000.
3 lakh, huh?
3,89,000.
Is it so? But I am getting some other answer.
Okay, let me try 7.
8 plus 5, 13. This is
390,
minus.
300.
Sorry, 390, 300? That's fine. This 15 is minus, madam.
Okay.
15 is minus.
90,300.
Yeah, 390, 300. Okay, that's the total expense. Now, this total expense of 390, 300 should be minus from the total income of 510. That's equal to 5,10,000 minus 3,90,300 is equal to profit before tax. Profit before tax, 1,19,700. Tax is not given in the question, only in question, not in the real life country. Okay, it is same amount of profit. 1,19,700 is the profit of the company. Now this 1,19,700 can be used for distributing dividend or retaining in the company for further expansion, depending upon the management decision in consultation with the shareholder. They will be conducting an annual general meeting. In the annual general meeting, they will discuss. Directors will propose, others may oppose, or others may also agree. Then finally, they will take a decision. In company form of organization, one share, one vote, democratic way of management. One share, one vote. If you have 10 share, if you raise your hand, that is equal to 10 vote. If someone is having 10 lakh equity share in the company, if he raise his hand, then 10 lakh vote, he is voting. He is casting his 10 lakh vote. That's logic. Based on that annual general meeting, they will take a decision. Okay, fine. Now come to the balance sheet. Our job is to do balance sheet. Balance sheet format, you know very well, already discussed in the before the break. So particulars, note number and amount. Balance sheet has two parts. One is equity and liability. Another one is asset. Okay. So equity and liability column. First we are taking shareholders fund. Shareholder fund is nothing but the share capital. It is given in the question 3 lakh rupees, and there was 16,000 rupees as calls in arrear. So I'll take note number 1 because it's starting from note number 1. Okay, note number 1, share capital 3,000 equity shares of 100 each, 3 lakhs minus calls in arrear. If it is not there, I'll take the 3 lakhs as it is. Okay. So 2,84,000 is the share capital. 2 lakh.
Professor, sorry.
Yeah.
Share capital is equity. I mean, it's an equity amount. Calls in arrears also equity, you are telling? I didn't get that.
No. What is calls in arrear? Calls in arrear means the amount which is not received from the equity shareholders.
Okay.
So amount to be received from the equity shareholder is 3 lakhs. Amount not received from the equity shareholder is 16,000. Then how much is the amount received from equity shareholder? Amount receivable from equity shareholder is 3 lakhs. Amount not received from the equity shareholder is 16,000. If so, how much is the amount received from the equity shareholder?
No, I'm trying to understand whether it is a liability or else whether it is a...
It's an asset.
Okay.
It's an asset. Then you are telling that, sir, why it is coming under liability side.
Yeah.
It is not coming under liability side. Look at this. If it is not coming under liability side, it's coming in the liability side with a minus symbol. With a minus symbol, it is coming. Whatever you write in the asset side with the minus symbol, that is just called as liability. Whatever you are writing in the asset side with minus symbol, that can be equated with liability. Simple understanding. See, instead of adding, if you minus, that's an opposite of that, right?
Yeah.
Actually, you can show the 16,000 rupees in asset side also. Calls in arrear is an asset. How it is an asset? Money receivable is an always asset. Debtor is an asset. Why it is an asset? Money receivable from debtors. Similarly, calls in arrear is an asset. You can show very well in the asset side of the balance sheet. But the debit in the liability side, you are showing 3 lakhs, and asset side you are showing 16,000 rupees. Net effect is how much?
The difference.
What is that? 2,84,000.
Yeah, 2 lakh.
That difference only I am writing it here. That's it. Instead of writing here 3 lakhs and writing in asset side 16,000, I am writing the net effect of 2,84,000. Since it is two are interrelated, to know the exact amount of paid up capital. That's it. Yeah. Is it okay?
Okay.
Okay, right. Next, resource and surplus. Here we have some calculations. Reserve is separate, surplus is separate, but while writing, we have to write it together. So we calculate the reserve separately, surplus separately. What is reserve? Profit earmarked as reserve. Undistributed profit labeled as reserve is called reserve. Undistributed profit kept in the business in the name of profit itself is called surplus. This money can be used for any purpose at any time. This money cannot be used for any purpose for any time. It can be used only for the specific purpose for which it is allotted, for which it is reserved. Okay. Let us now calculate the reserves and surplus. So before calculating reserves and surplus, first we will calculate the surplus. How do you calculate surplus? Surplus is nothing but the profit of the company left out after doing all kind of appropriation. In this company, before starting the business of this current year, there is a profit of this company that is 27,000. Where it is given in the trial balance in the name of profit and loss account. Look at this. In the name of profit and loss account, it was given in the trial balance. Where it is. Somebody help me, I'm not able to get it. Profit and loss account. Yeah. Yeah, this is there now. Profit and loss account, it is 27,000. Meaning, this company, in the beginning of the year, already it has 27,000 rupees as profit undistributed to the shareholder. That amount is available for now also. Okay. So that is 27,000. And the current year profit, how much the current year profit is just calculated now? We just calculated, we did the profit and loss account now. How much we calculated as a profit of the current year?
1,19,700.
Yes, 1,19,700 is the last bottom line of the profit and loss account. 1,19,700. So last year, up to last year, we had a profit of 27,000. Current year, I have earned a profit of 1,19,700. So the total profit available for distribution, total profit available for the company, available in the company for distribution, available in the company for distribution, for using, distributing, okay, for distribution is 1,47,700. 1,46,700. Now, out of this, what that company has done, we are given an information. There was a dividend given by the company, interim dividend. Interim dividend. What is that interim dividend given in the company? Look at the trial balance. In the trial, trial balance, they have given an amount of interim dividend. Interim dividend was given. Look at this, 21,368, and for that amount they paid a tax of 3,632. So the total dividend of the company is 25,000. That 25,000 is taken away from the profit of the company. 25,000. Look at this. 25,000 is taken from this 1,46,700. 25,000 was used to give dividend. And again, the company is declaring a dividend of 71,000 rupees in total. 71 in total. How do I know? Look at the adjustment number, first adjustment. Look at this first adjustment. The directors are proposing a dividend of 25% on paid up capital. 25% of paid up capital. 25% of paid up capital. What is 25% of paid up capital? 25% of paid up. What is the paid up capital? 2 lakh. What's the paid up capital?
2,84,000.
Yeah, 2,84,000 is the paid up capital. Already we calculated the capital. 2,84. 2,84,000 is the paid up capital. That is equal to. How much? 2,84,000, 25%. Calculate it. 2,84,000 into 0.25 is equal to
71,000.
71,000. 71,000 is the dividend to be paid. But already how much we paid? Already we paid 25,000 we paid. So remaining amount is 46,000 to be paid now. So that is a proposed dividend now. The new proposed dividend. Okay, 46,000. So from this amount, 25 is already given and 46 we are going to give. We decided to give, and in the question they are telling you transfer 60,000 rupees to general reserve out of the profit. Look at this. Transfer 60,000 rupees to general reserve out of the profit. I will transfer 60,000 rupees. So that is also going away from my profit. It is not going anywhere. It is going to be in the company only, but it has a different name. It is going to be in the name of reserve. So 60,000 rupees. Okay. So all these things are appropriations.
Sir, can you explain the transfer to reserve again?
See, out of the profit, the company has made a decision. 60,000 rupees to be transferred to reserve.
Correct.
Where it is called, where it is going, it is not going anywhere. From one account heads to another account heads, it is transferred. That money you cannot reverse it back. That money cannot be used for any other purpose. It can be used for some specific reserve purpose for which it is created. That is why from the profit of 1,46,700, we are getting 60,000 rupees less. That 60,000 rupees is taken from the profit and loss account and it is kept under reserve account. Already there is a reserve, no, 2,50,000 reserve is there up to last year. Along with that 2,50,000, this 60,000 will be added. Okay. So all these things are appropriation of profits. Profit is this much, 1,46,700. From that you minus these three items. You will get 15,700 is the left out profit in the profit and loss account. That is called surplus. Okay. So this 15,700 to be taken into resource and surplus note. Resource and surplus note. Look at this. The reserve fund already surplus. We just finished this. The surplus what we taken from that particular note, it has come 15,700. But actually the opening reserve fund in the question is 2,50,000. In the trial balance, there is a reserve fund. Look at this. There is a reserve fund. 2,50,000. This is a reserve fund. Along with that, current year we made a reserve of. Current year we made a reserve of how much? 60,000. 60,000. So total reserve is 3,10,000. Total reserve is 3,10,000. Surplus is only 15,700. The total of reserves and surplus will be 3,25,700. That comes to profit and loss account, 3,25,700. Okay. Then there is a borrowing. Borrowing means there is a debenture. Look at the question. There is a debenture of rupees 2 lakhs. Here it is, debenture, yeah. Debenture. What is debenture? Yeah, 1 lakh.
1 lakh.
Debenture is only 1 lakh. Debenture is only 1 lakh, and there is a public deposit of 1 lakh. One more liability is there, no? Yeah, this is liability. We already decided this liability, 1 lakh. So put together is 2 lakh is the liability. 2 lakh is the liability that is written here. 2 lakhs through working note number 3. And these are all not there, so left blank. Then current liabilities, there's a trade payable. What is trade payable? Sundry creditors plus bills payable. What is sundry creditors? Look at this. Sundry creditors, yeah, it is there. 1,50,000 plus bills payable. Look at this bills payable. 90,000. So 1,50,000 plus 90 is equal to
2,40,000.
Yeah, that is written here. 2,40,000. Next, short-term provisions, working note number 5. Look at this working note number 5. Only the provision for dividend. We declared a dividend, but we did not pay. Till we are paying, it's a provision only. So 46,000 rupees is still payable. That's a liability. So 46,000 payable. Liability 46,000. 46,000, yes. 46,000 is a liability.
But that we already considered in the surplus, no, Professor, just now?
See, that's what it's an adjustment, right? Adjustment item should be considered in two places. The journal entry is not done for that, right? If you do journal entry, we will write one thing in debit, one thing in credit. Say, for example, payment of dividend by cash. What's the entry you will make? Dividend account debit to cash account. 20,000 if we pay dividend, you will write in two places. Dividend account debit 20,000 to cash account 20,000. In two places you are writing. Am I right? One is from cash it is minused. In one is dividend it is added. Similarly, the entry is not done so far. It is only given in the adjustment. It is not done journal entry. It is not done ledger. It is not going to trial balance. If it is in trial balance, you are right. We can take in only one place and we can write it and we can finish it. But it is in adjustment. What is that adjustment? Look at this. That entry is in adjustment. Directors proposes a dividend of. It is just a raw entry. Raw entry. Now we have to give impact in the two places. Double entry bookkeeping. Each and every debit has its own corresponding equal debit or credit, vice versa. So that the double entry bookkeeping process will complete. That is why any amount given in this adjustment should be recorded in two places compulsorily. Take for example, preliminary expenses. 25% you return in profit and loss account.
Correct.
The same 25% you will minus from preliminary expenses, and the rest of the amount you will write it in the balance sheet. All. Even depreciation. Look at the closing stock. Closing stock you consider in trading. The profit and loss account one time to calculate the change in inventory. Another time you will consider in the current asset. Okay. Yeah. So next, what we are doing now in the liability. Yeah, proposed dividend we return. 46,000 is the proposed dividend payable. Now take the total of equity and liability. That is 10,95,700. Similarly, go to the asset side. I'll take another 5 minutes to finish this. We cannot leave it like this in between. It's 4:30. Yeah. So non-current asset is the first heading. Under that, fixed asset is the another subheading. Under that, tangible assets. Look at the trial balance. By scanning the trial balance, you will come to know what are the fixed assets available. Look at this, buildings available. For how much? 1,80,000. After that, furniture was there. Furniture 80,000. Then only two. So go to the working note. Working note number 6. Working note number 6. Tangible assets. Tangible assets. Tangible fixed asset. Tangible assets. Okay. So building 1,80,000 written here. Machinery 89,000 written here. Furniture 80,000 written here. Okay. But there is an adjustment in the adjustment column. 2% is the depreciation. You know, already we have done that. We'll calculating the depreciation expense in the profit and loss account. Again, now we have to minus the value of asset. We have to reduce the value of asset. Previously, the value of asset was 1,80,000. Now the management decided to write off 2% as depreciation because of the usage. Okay. Now if you minus 3,600, that is 2% of 1,80,000. The real value at the closing period of the accounting year is 1,76,400. How I got 1,76,400? 1,80,000 minus 3,600. In machinery, there is no depreciation, so it remains the same value. In furniture, it was there 5%, so it is 8,000. 80,000 into 5%, 4,000 is the depreciation. After minusing the depreciation of 4,000 from the book value of the furniture in the beginning, that is 80,000. It becomes 76. So take the total value. Total value is 3,41,400. It need to be recorded in balance sheet under the heading called tangible asset. Tangible asset. 3,41,400. Is it fine? Next, intangible asset. Intangible asset, we have the goodwill. Goodwill, intangible asset. Goodwill was 52,000 in the balance sheet. There was an amortization, right? There was an amortization. Write-off. Write-off. How much write-off? 10% write-off. 10%. 10% on 52,000 is 5,200. Look at the trial balance. It is there. We already know that. Goodwill. Yeah. 52,000 is the goodwill. Okay. In that they're telling you write off 10% of goodwill. That is why it is done here. 10% is 5,200 minus 5,200 from 52,000. It becomes 46,800. That's amount of intangible assets. If there are any more assets, just like that, you add it. You take one more like this. If you go on, then the total will come in the last. Okay. Is there anything else, patent or trademark, anything is there? Okay. Right. So goodwill is written here, intangible asset 46,800. Then investments. There is only one item in investment. Yeah, look at this investment. There is no change in investment. So as it is there. I'm writing it here without a note number. Directly I'm writing it 22 lakhs. Sorry, 2,50,000. Then long-term loans are not there. Long-term loans given by our company to outsider is not there. So I'm leaving it. Other current assets are there. So I'm preparing a note. Other current assets, but only preliminary expense. It was 60. 15 was written off. 15 was charged to current year profit. That's the meaning. Written off means charged to current year profit. Current year profit will come down by 15,000 rupees. Slowly we are minusing it. So 45,000 is the net balance that comes to other non-current asset. Other non-current asset is 45,000. Done with the non-current asset. Now we have to do with current asset. Current asset, first category, current investment. There is no amount in the trial balance. This company did not do any investment which is of current nature. So 0 or leave it blank. Inventory. There are two inventories. One is closing stock of stock in trade. Another one is tools. Another one is tools. Yeah. Closing stock in trade, which is given in the adjustment. You remember adjustment, there was 80,000 rupees. We already discussed when we calculate that change in inventory. And then there is another asset in the question.
Professor, sorry to disturb you.
Spare parts.
Yeah.
Okay.
There are two investments, right? One is non-current investment and current investment.
Yes.
So how we define where we have to take that investment from the P&L statement?
From P&L statement, why do you take?
No, we have taken, right, in the non-current investment, we have considered the investments from the profit and loss statement just now.
No. Where we considered from profit and loss account?
Can you just go back to that balance sheet, sir, once? Yeah, this one. I'm talking about this one.
I know you are talking about this one, but where it come from?
We have taken
from
P&L
reserve fund.
No, why do you
take trial balance? It is trial
all
balance.
the items, whatever it is written, please understand the basic one. I told you, you are forgetting it. All the numbers what we are writing, all the numbers 99.99%, all the number what we are writing in this trial, I mean profit and loss account as well as balance sheet should come only from
trial balance.
Trial balance. That's the only source document. This is the document from which we are taking it. Look at this. This 2,50,000 is here.
Correct. So what I was asking is how to know whether it is non-current or current That's what my question.
Yeah, that good question. Anybody would like to answer?
Maybe because we are considering this from the previous year, we are telling like that. It's just
No, your question is very exactly correct. Okay, because if it is given only investment, then how do I take it is investment of long term as well as short term? There are two investments in the balance sheet. One is under
non-current and current, no?
Yeah, that's what long term, short term is nothing but long term and non-current and current. Non-current is long term, current is short term. But here nothing is mentioned. Your question is very much apt because nothing is mentioned here, sir. It is non-current or it is current. Nothing is mentioned. Then why did you take under? I have taken under which one?
You have taken under non-current.
Non-current.
Yeah.
If you have that confusion, you please ask the people who made this investment and take. I'm not joking. It's real sense. I'm telling. There will be a note on this particular ledger account. In real sense, I'm telling. In real life, it is coming from ledger balance, right?
Yeah.
The trial balance is coming from ledger balances.
Correct.
That ledger balances, there will be a code. There will be note what kind of investment it is. From there, we have to make sense. But in academics, we can't call to the department and ask. It's only exam and only academics. In that time, it is left to you. You can decide. You can write a note. Sir, this investment is just a return, just investment. It is not pertaining to any non-current or current. So I have taken in current or I have taken in non-current. Okay, fine. That's purely left for you. You can take a decision. But if some amount is very bigger amount, look at this capital itself is how much?
3
lakhs only, or 2,84,000. So it is very big amount. So you can take it as a non-current, or you can argue like this, sir, capital itself is 3 lakhs. Then how they will make a long-term investment of 2,50,000? If that is argument, take it as a current investment.
Okay.
If information is not clear, it is the accountant to take a decision. It is the student to take a decision now in the exam. So you can write a note, investments worth rupees 2,50,000 found in the debit side of the trial balance is not mentioning about the nature of investment of current or non-current. So it is considered to be long-term investment. So it is recorded under non-current asset of the balance sheet, non-current investment of the balance sheet. That's one thing. Otherwise, just the opposite, you can write it.
Okay.
Yeah. Okay. Right. Next. The next stage is, one more 5 minutes. Let us finish it. Yeah. Now we are in non-current investment over. Other non-current asset also over. Preliminary
Inventories you are explaining, sir.
Yeah,
Sorry,
I
just
no problem. Inventory. So inventory is two things. One is closing stock, another one is tools. Put together is 1,18,000. Inventory put together is 1,18,000 that you have taken here. Okay. Very good. Next, trade receivables are nothing but bills receivable and sundry debtors. Go to the trial balance. Debtors, debtors are here. Amount is 2,20,000 and bills receivable is 61,000. Both put together is 2,81,000. That comes under trade receivables. 2,81,000 trade receivables. Okay. The same thing can be given in note also. Then cash balance. Look at the trial balance. Cash balance is 12,000 rupees. Look at this. 12,000 rupees the cash balance. This already considered. This also considered. Okay. So 12,000 is the cash balance. I'm writing that in the 12,000. Okay. There is no short-term loans and advances given by the company. Other current asset is nothing but the prepaid insurance. Prepaid insurance. That's it. Prepaid insurance. 1,500 is there. Is there any other prepaid expenses are there? Take one by one. Take the total. Bring to other current assets. Other current asset 1,500. If you take all the things correctly, the total of asset side should be exactly equal to the total of liabilities and equities. 10,95,000, 10,95,000. If so, the company's balance sheet is done. So this is how you have to do the profit and loss account of the company as well as the balance sheet of a company. This is all done through ERPs nowadays. Then why do we study this? To analyze it No ERPs are there. We have to only analyze. Even some calculators, even some programs are there to analyze. The result only that will give you, you only should take a decision. That's one thing. Another thing is, if you want to develop your own ERP, or if you want to alter or modify the ERP already there, or you want to program it anything like this, or even just in Excel by having the Excel functions or having the macros or something like that, you can also frame templates. You can also construct templates. Do all those things. We need the basics of how a balance sheet is prepared and how a profit and loss account is prepared. That is why this is there for you. We learned now to the maximum possible extent. Of course, it's very difficult within 1.5 hours or 3 hours to learn the concept of this nature. But you have done our level best. I request all of you to just go through two things. One is the real-time balance sheet of a company and the profit and loss account of a company. And the second one is work out all the problems or maximum number of problems found in this particular file. And also one more PDF file I will share. That file also you work it out. Okay, that will make you to know little more clarity on this. One time if you do, you cannot get it clearly. You have to practice at least minimum 3 questions. In a reasonable questions you have to prepare. Then you will come to know what exactly a balance sheet is and what exactly a profit and loss account is. I am happy even if you don't know how to prepare a balance sheet, even after your class. I'm telling in a true sense. But you should know the logic. What is a balance sheet? If anyone is asking you, you should not give an idiotic answer. What is a balance sheet? Anyone can tell me, we can close it with that. What is a balance sheet? Just try. What is a balance sheet? I have not told you so far the definition of a balance sheet or meaning of balance sheet, but we have prepared a balance sheet. Anyone can try what is a balance sheet?
Sir, I'll try.
Yeah.
Balance sheet is about the particulars of the information about the equity, liabilities, and asset of the company.
Okay. Equity, liabilities, asset of the company. Okay. So balance sheet is a statement which shows the financial position of the business on a particular day with regard to equities, assets, and liabilities. Correct. What you told is correct. Like that. You should not take any income or expenditure from the trial balance and record it in the balance sheet. That is idiotic thing. Suppose wages, you are finding a wages in trial balance. Where you would record that wages? While preparing the financial statement. Profit and loss account. Under expenses. That too under
expenses.
Expenses, okay. That too under which expense? There are A, B, C, D, E, F, G. Which expense? Under
employee
benefit expense. Okay. You should not take interest paid to balance sheet. Interest paid to balance sheet should be taken to profit and loss account under expense, that too under finance cost. Like that, clarity you make. Whether you are preparing correctly, that answer is tallying or not, that is not a matter in your life. Only for mark, that is 9 marks. If tally, 10 marks. If not tallying, 8 marks or 7 marks. That's over. But the logic, the basic understanding, what is a balance sheet, why it is prepared, and how it is prepared. That things are very, very important for your course called Accounting for Manager. Okay, with this, I will stop talking. If you have any queries, one by one, you can ask for another 5-10 minutes. Since you don't have any further class, we have that flexibility of taking some 5-10 minutes more. Already we have taken some 10 minutes more, but anyhow, no problem. If you have any queries, you can ask one by one. 5-10 minutes we can spend. Yes, anybody has anything to tell, anything to ask, anything to convey, any doubt, specific doubt? How many of you have taken the NCERT book I told you in the beginning and read it for some time? NCERT book with regard to journal, ledger, trial balance. Don't feel that you are engineer or you are MBA, but I'm telling you to take a 11th standard.
I have taken the book, some few pages.
Yeah, that will be giving you a clarity, the basic clarity. You did not come across any doubt?
Professor,
yes, madam.
Not yes, doubt. See, we have talked that losses also will be considering in the debit. So generally, what type of losses will be there? We didn't see in our statements.
Okay. So losses are considered as a debit balance. Suppose you are having a profit and loss account debit balance. Your loss will be there in the name of profit and loss account. That will be shown under debit balance of the trial balance. In our question, in this question, we have taken this profit and loss account now as a opening balance. Look at this. To calculate the surplus,
Correct.
we have taken an
Starting
opening
we have
balance.
taken,
Yeah, this 27,000 has taken as opening balance. No, this
Correct.
was there in the credit side of the trial balance. You remember? This was there in the credit side trial balance.
Correct.
It is in debit side, that is called loss.
Uh,
The company, fortunately, this 27,000 is not debit credit side. Look at this. 27,000 is in the credit side.
correct.
Yeah. If it is there here, then it is loss. It should be taken as minus.
Like what type of items we can consider? Like for example, wages. If it is there, we are calling
Okay, okay. You are asking in that way. Wages is a expense, salary is an expense,
Yes.
and then sales is a revenue. Like that, what item can be come under loss?
Correct. Correct.
Loss on sale of furniture, loss on sale of asset, loss on sale of any fixed asset. That
Okay.
will be an individual item. When you are selling an asset, you are selling an old asset. You are buying a machine using for 4 years and selling it at the end of 4th year. That
Okay.
time you are selling it for lesser than the book value. What is book value? Cost of the asset minus depreciation till date is the book value. Suppose you bought an asset for 1 lakh, used for 3 years. 3 years depreciation is 10,000 rupees each. Now what is the worth of the asset in the book? I repeat again, you bought an asset for 1 lakh, used for 3 years. Every year the depreciation is 10,000 per annum.
Okay.
Now, what is the book value of that asset?
1 lakh minus 30,000.
How much?
1 sec.
70,000.
70,000.
70,000 is the book value. Suppose you find that machine is not good for now, new technology has come, you want to scrap that and you want to buy another one. You are finding another small manufacturer, he wants that machine, but he is ready to give only 60,000. You also ready to sell that machine. Now the 10,000 rupees what you are ready to forego is a loss on sale of machine. That comes under debit side. That comes under debit side, which is called as loss. Loss on sale of machine. Discount on issue of debenture. Discount on issue of equity share. All these things are example for loss.
Okay, sir.
Yeah.
Generally, can I consider discounts as losses?
Yes. Discount as a loss. Yes. Discount on discount allowed. Discount allowed is a loss. Yes,
Okay.
you are right. That comes under debit side, it's a loss.
Okay.
Professor, I have a doubt. So in
Yes, sir, yes.
assignment, there is a statement stating that rupees 25 lakh was raised from general public by issuing equity shares of rupees 10 each at par. What is the meaning of at par? I did not understand.
At par means 10 rupees share is sold for 10 rupees only.
No premium. Or
No premium.
Fees.
Suppose
Okay.
if 10 rupees share is sold for 15 rupees means 5 rupees premium.
Okay.
Yeah.
So, okay.
So the entry for capital is bank account debit because you'll receive the money through bank only, no? So bank account debit to
bank account debit to
capital
account. Capital account.
That is not just a capital, no, it is a share capital.
This is equity, okay. Yeah, share capital.
Share capital.
Yeah.
Okay, to share capital account. And if there is 2-3 types of share, then you would write the name of the share also, equity share capital. Suppose a company can issue preference share also. That time it will be to preference share capital also. To preference share capital. Preference share capital. Suppose if you issue for premium, it will be coming like this, 2 securities premium account. to securities premium account. If you issue for premium, suppose if you issue for discount, that time it will come here, discount on issue of discount on issue of shares, discount on issue of shares account. 10 rupee share you are issuing for only 9 rupees. That time you will write the 9 rupee here, 9 rupee here, then that 1 rupee. I'm just taking an example of one share. Okay, that 1 rupee will come here. Then equity share capital account will be 10 rupees. If you are issuing at a discount, you are collecting 9 only, but you are promising them to pay 10 rupee as a contract. That's why 1 rupee loss. Discount on issue of shares. Okay, similarly, if you are issuing equity share like this, it will come. Suppose if you are issuing a preference share, if you are issuing a preference share, instead of writing equity share, you just write preference share. That's all. Here it will be 10 rupees. 10 rupees. Okay. Suppose you are issuing for 12 rupees. That time this won't come. This won't come. It will be 2 rupees here. 2 rupees. Bank account debit 12 rupees. To equity share or preference share capital account 10 rupee, as the case may be. To securities premium, how much is the premium amount? That is 2 rupees. Like this. Even the 25 lakhs, what you are contributing now in the assignment. In assignment, you are contributing 25 lakhs, right?
Right.
All those things are only share capital only. So what you would write? Bank account debit, how much? 50 lakhs. Actually, in that question, it is 50 lakhs. 25 lakhs you are contributing and 25 lakhs you are getting from the general public, right?
Right.
If that is the case, it should be like this. All the amount is only capital only. If you give or your friends are giving or general public giving, if it is a company form of organization, then it should be like this only. Bank account debit 50 lakhs to equity share capital account 50 lakhs. That's all.
Okay, there should not be two entries then, like bank
If
account
you want
debit
to
to
entry, bank account debit 25 lakhs to equity share capital account 25 lakhs. Again, bank account debit 25 lakhs to equity share capital account 25 lakhs.
Yeah.
If both are in two different dates, definitely you have to make 2 entries. If both are in the same date, 1 entry is enough.
Okay.
Yeah. This is what somebody asked. Is it you in the WhatsApp?
Yes, Professor. Yes,
Okay,
it's me.
okay. Now it is clarified. Yes.
Yeah.
Professor, I'm having one doubt in
Please.
that assignment 1, that transaction period.
Yes, yes.
3
Transaction period is, there is a mistake I told in the WhatsApp group. No, nobody seen that and nobody replied also. There is a mistake. Yeah, there's a mistake. That is 1/4/2022, 31/3/2021. It should be 1 year. It should be 1 year only. You are right. That's a
Okay,
mistake.
Professor. Got it.
That's
Thank you.
I just taken that and photo screenshot I put it. 1/1/2022, 31/3/2021 is there. Instead of that, it should be 1/4/2022, 31/3/2021. Yes. Anything else? I hope that now engineers are slowly getting into numbers, getting into debit credit, getting into accounting. Normally, engineers, if they start learning this, it will be just 2 months. You can finish it everything and you can outperform the so-called commerce students or business students. So many so many finance professionals are from engineering background only. Accounting only is like this, logic. I hope engineers would be more good in logic. Okay.
Professor.
Yes.
I just saw there is
You are an engineer?
Yes, Professor.
Okay, okay. Tell me.
There is something called in Moodle. I just saw makeup examination. It's not for us, right?
Regarding that, I'm very poor in that understanding. You just contact the office. It may
It's
not be there.
not
No.
for us.
You have not done any makeup in the beginning. After makeup is over, only second makeup will come now. You are the first year student, right? First year, first attempt. Not yet tried any exam, no?
Yes, sir.
Yes,
No, it got listed in ours. That's why.
Maybe it is for your seniors.
Okay.
Yeah, those who missed it or those who failed, maybe like that.
Okay, okay, sir.
Regarding anything on LMS, anything on communication, please be in touch with either Professor Rajan or at least Mr. Aravind. We'll get clarity on that. Yeah.
Okay,
Anything
Professor.
else?
Thank you.
Okay, thank you so much. If you don't have any other questions to ask, anything to tell, we'll wind up now. Thank you so much for joining and see you later. But any point in time, you can call me in WhatsApp call every day, evening 7 to 8, 8:30, except Sunday. Okay, thank you. See you all.
Thank you.
Thank you, Professor.
Thank you, Professor.
Thank you.